Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Thursday, August 20th. Thank you all for being here. We are back. We've got a lot to talk about, a lot to get into. We are red in the pre-market, and we are red for a variety of reasons, and we'll talk about why we're red. A lot of it has to do with oil prices, unfortunately. A lot of it has to do with bond yields. I've spent a lot of time this morning researching bond yields and trying to become an expert on what the Fed cares about and what the Treasury cares about. And honestly, it's pretty freaking boring. But nonetheless, we're going to talk about it because, unfortunately, we are seeing the highest 1 month price on oil, which is at $87.45 right now. We actually got to $89 at one point. It's up 4%. And that is why your Nebiuses of the world, your Metas, your Palantirs, your Nvidias, they are all red in the pre-market. We got oil that's up and a 10-year that's not really budging. And so unfortunately, I think that might end up being the story of the day. Now, maybe it gets faded if the 10-year kind of fades right back down. It was at 4.703 in the morning. Right now it's at 4.696, basically at 4.7. But I think bond yields and oil, once again, might create some issues for the broader equity markets. Having said that, even though stocks are struggling a little bit in the pre-market, I mean, you've got Bitcoin that finally has crossed 71,000 right here. It was at 72,000 a couple hours ago. We are finally seeing some momentum in crypto. BMNR, MicroStrategy, Robinhood, Coinbase, all of these names having a lot of love. ETH right there, just below 2,300. It did hit 2,300 earlier in the morning. I don't want to say we're back, but it kind of feels like we might have some potential to be back. And the fact that we are seeing the volume come in, the excitement, and the derivative assets start to get the value from crypto, in particular Bitcoin and Ethereum, making a move. Obviously, Trump had that meeting yesterday with Vlad and Brian Armstrong and all these different people that were influential in crypto. And Trump, effectively said, we are going to make sure that the United States continues to innovate and lead when it comes to crypto. I think that injected a lot of confidence, exuberance, and excitement. And if we can finally get the Clarity Act passed, hopefully in the next couple months, I think there'll be a long-term catalyst for Bitcoin. Obviously, I think the rate cut would really help. I don't think we're going to get a rate cut, but at least if we don't get a hike, maybe that'll be interpreted pretty positively. Walmart is also down 7.3%. They did not say the best thing about the consumer. I think that's also why the market's struggling a little bit, as Walmart basically said the wealthy consumer is fine, but the regular consumer is stretched. And they beat on their numbers. It's not like their numbers were horrible. They missed a little bit on the guide, but the actual commentary on the consumer was not the best. So you've got that, you've got oil, you've got bond yields, and then you've got this kind of general sell-off that's been happening all week. S&P 500 has really been immune to it, but different sectors like the semis have been getting hit a bit more. S&P right there down about 0.47%, recovered 50% of what we lost on Monday, yesterday. But you can see right there, we are red in the pre-market, and we're going to see if the market can flip that later going on into the day. Nvidia right there just flipping green. Webull had a great quarter. That's up 13%. Crypto also a catalyst for Webull. And then Moderna, it got to almost 200 last night, guys. It's at 165 right now, but it ended 176% up on the day. So this name absolutely took off as well. Right, let's get into it. Good morning, good morning, good morning. Thank you all for being here. Why are you guys all spamming about my hair? Have you guys not seen my hair before? You guys have obviously seen my hair before. I don't know why it's such a new thing to so many people. No, I just felt like not wearing the hat today. I was like, screw it. We're just gonna. It kind of looks like I partied last night. I absolutely did not party last night, but it does. It looks like bedhead, to be honest. It looks like I just woke up out of bed, which I kind of did, but it was 2 hours ago, I guess. But yeah, no, we're just leaving it out. Who cares? All right, got a lot to talk about. A lot. Good morning. Hopefully everyone's having a good week. We're almost at the end of August. I just noticed it today. Like tomorrow's the last day of summer, August 21st. And then we get into the fall. And then, September 21st, technically. Well, no, is tomorrow the last day of summer? When is the last day of summer? No, it's September 21st, right? Yeah, September. Okay, so tomorrow's not the last day of summer, but we are a month away from, so it's already getting cold in Jersey. Like I'm already walking outside with a hoodie on. And so the fact that the weather's changing and we are actually getting to the point where we are headed for September through December is kind of crazy. Okay, for those that are seeing an ad, I don't know what to tell you guys. Like the ads are not on for the midstream. So and the fact that all of you are saying it at the same time means that YouTube gave all of you guys an ad at the same time. I genuinely don't know this was happening yesterday as well. And I thought maybe it was happening because I was streaming with the other guys and maybe their settings. But if it's happening on my stream independently, then it's not because of their accounts. I mean, I don't know what to do. It's off in my settings. I checked it last night. I checked it during the stream yesterday. That is really weird, bro. That is very, very weird. Yeah, it's on manual. Manual means I have to turn it on. Scheduled means YouTube does it. Automatic means YouTube does it. If it's on manual, then that is the creator chooses when to do it, as you can see right there. So you guys should not be seeing that. So I don't know. That is very weird. I don't know if YouTube's trying to get everyone to buy premium, but that is a bit confusing. I'll see if I can figure something out for the market close, but I'm not sure why exactly that is happening. All right, let's get into it. Let's get started. I think we start off with these Treasury yields, and we got to kind of talk about what happened yesterday. So yesterday we talked about this for a little bit, but we had so many headlines in the pre-market with Marvell and AMD that it was kind of hard to keep up with it. But yesterday the Treasury effectively did something that is akin to quantitative easing. It's not literally quantitative easing, but it has quantitative easing effects. So yesterday, Bessent announced liquidity support for buybacks on long-dated U.S. Treasuries. What are they trying to do? Effectively, they are trying to re-architect the debt that they have from the short end of the curve into the long end to try to get this 10-year, this 30-year yield to come down. Now, these yields rising is not the worst thing in the world. The problem is the market is not used to 10 years and 30 years being at these levels. Again, they're at the highest levels of the 30 years since 2007. The 10-year, the highest level since last year. Last year when we had the 10-year at these levels, the S&P was down 30%, right? So it's like the market's trying to figure out, can people buy stocks in a world in which there is a competitive rate of return that is risk-free from the 10-year and from the 30-year, and does it even make sense to buy stocks if inflation continues to go up, which is the expectation on oil prices, which is kind of like the core reason why I think inflation has gone higher, leading people to not want to buy bond yields, or bonds, which means yields go up, right? There's an inverse relationship. If you buy bonds, yields come down. If you sell bonds, yields go up. And if yields go up, the cost of financing the country, because this is how we borrow money to pay for all this stuff, because we don't have enough tax revenue to do it. By the way, we just passed 40 trillion of national debt yesterday. We added 10 trillion in 4 years. It's kind of crazy. But I think the market's starting to be a little scared of that. And because the market is getting afraid of that, that is why you're seeing not only oil prices go up based on some of the stuff that Trump said yesterday, but also you're starting to see stocks take a little bit of a hit of just like, hey, can we actually meaningfully live in a world in which these bond yields go higher? Here's some analysis from one of the big banks. I thought they kind of did a good job kind of explaining this, but I think the broader issue today, you might be asking, well, okay, this sounds like a good thing. At least they're trying to get rid of some of the long-term debt or refinance it. But it's not working. That's the problem. We're at 4.7. We were at 4.74 yesterday. It went down to 4.65, which made people think, okay, it was working. And now we're right back to 4.7. So the fact that it's not really working, or that the intended effect is not necessarily going into practice right here, is I think why stocks turn red in the pre-market.
When the Treasury wants to make a change, either to their issuance program or their buyback program, they're going to make that announcement at a quarterly refunding. We just had a quarterly refunding in August. We don't have another one until November. So no one was coming in and saying this is something that was on our bingo cards. Now, that being said, there has been a lot of talk over the last few weeks about what could possibly stabilize the long end of the yield curve.
Because everyone's watching the 30-year go to 533. Again, not that the 30-year is like the most important thing in the world, but it just tells you where, things are getting a little illiquid.
Right, exactly. And so I would say, so the way that these buybacks work is there's really two purposes that have been stated: cash management and liquidity support. This was under the guise of liquidity support, but really we weren't seeing a lot of liquidity issues within the bond market. We're seeing a material repricing higher in long end yield that's been happening, I would say, fairly gradually over a number of weeks and months, not necessarily liquidity concerns.
People just don't want to own it at these levels.
What it signals is that the Treasury is looking at the yield level. Right. That's obviously what is influencing that decision. So I think what we need to do is we need to think about what got us to these yield levels and what could the catalyst be to stabilize yields, and will this announcement from the Treasury be enough to stabilize yields? As it relates to what drove us here, I don't think that it should be lost on people that what really started this regime shift was the war in Iran.
Right.
It was a close.
Once again, it goes back to that war. If we didn't have that war, we likely wouldn't see oil prices go from 55 to at one point 120. Now at basically 90. And, the bond market, probably the credit markets would be calming down because bond yields wouldn't be that aggressive. It doesn't help when we pass 40 trillion in debt, and, a lot of bonds are correlated with the amount of debt that we have, at least the perception of them. And then you also have oil rising the way that it's rising today. I mean, up 4% is no joke, right? It was stuck at 70 last week. Now it's at almost 89. So that kind of is the reason why we're in this dilemma. And unfortunately, whatever Besant did yesterday, it's just not having an impact to great confidence coming back to these bond yields.
Of the Strait, it changed the risks and the balance of risks around inflation. Now, even this morning, I've been looking at oil prices and they're actually starting to climb higher again. So we're not out of the woods from that situation. The other thing that has changed over the summer is we got a new Fed chair. And this would be a difficult environment for anyone, even if we had continuity in leadership, but we have it. We have a new Fed chair. The market is still understanding what his reaction function is. And that has also injected a lot of term premium into the market. Now, what
do you think there's term premium? So I'm surprised by.
So I would say yes for term premium. And there are a couple reasons why. When you look at the repricing, a few things really stand out to me. One, inflation expectations remain extremely well anchored. So this move higher really hasn't been, at least according to the bond market pricing, a fear around runaway inflation. The second thing is the pricing of the terminal rate. So how high the Fed funds rate is going to get in this cycle. That has actually stayed fairly stable. So if the market was really sending a signal that the economy was overheating, the Fed policy rate was in the completely wrong place, I would expect market pricing of the terminal rate to come up a lot. That's why when you eliminate those two things, you get to this term premium type of discussion that we're having. Now, how do you stabilize yields, right? I heard you guys.
How would you, by the way, explain what, to me, when I think of term premium, I think as people don't want to hold this stuff, as much as they, how would you explain it in sort of lay terms?
I mean, I think that's fair. What you're getting at, in essence, is the additional compensation that investors require to hold longer dated bonds. And it's that additional compensation. Why do you need that additional compensation? Well, there's a variety of factors. It could be the uncertainty around the geopolitical environment. It could be the uncertainty around the Fed framework. It could be the deficits, the corporate supply. Term premium can incorporate a lot of different things.
It's because,
and that term premium continues to go higher and higher, right? Which is why these yields keep pumping. So what Besant tried to do yesterday was basically, hey, let's buy back a lot of these treasuries. Let's create more liquidity, particularly for the 30-year, where some of the liquidity was drying up. And let's give the market confidence that we are going to be on a path to get these yields to come down because we're going to have some of our fiscal policy in order. Unfortunately, you don't have a rate cut coming anytime soon. You have oil prices spike the day after Besant does this. And he only did like $4 billion worth of it over 2 months, but still it was enough to at least get yields to come down yesterday. And they're right back to where they were yesterday. So now it's kind of just like, was it even effective from a perception perspective? And then oil up 3% the day after. With inflation concerns doesn't really help. Robinhood right there, $100 in the pre-market as Bitcoin continues to go higher. We'll talk about Bitcoin in a second. So yeah, I mean, that's what we've got going on with bond yield. It's not the most exciting stuff, but it is important to understand. And until Besant or Trump or someone in the administration gets the credit market to feel confident that you can buy yield or you can buy bonds and ultimately we can get a mass aggregation of yields to come down. Again, Japanese yields are also going up just across the entire world. It's been higher and higher. Then I don't know. It just feels like this is going to be an overhang on stocks, and it's going to be one of those things that makes it tougher for the S&P to just kind of explode into that $8,000 range purely based on earnings, because so much of that earnings premium has started to get priced in. Ironically, and this kind of gets us into crypto, I think this might be why crypto's pumping, because I mean, what was the initial thesis on Bitcoin? Our debt is unsustainable. We need a fixed money supply that can't be manipulated. Fiat currency is being debased. Maybe. I mean, maybe this is totally off, but maybe Bitcoin's actually coming back to where it is supposed to come to, which is, an asset that is a hedge against inflation, even though it's not acted like that for a long time. I think more realistically, Bitcoin's getting the premium from the Clarity Act and the excitement around crypto, tokenization, et cetera. But it's also this idea that, hey, if we can't sustain the debt that we're having and we are just seeing yields explode, maybe people are looking for an alternative asset. Ironically, people look to risk on assets in the face of that happening. And that's why Bitcoin, gold, et cetera, have started to maybe make a little bit of a move, but they also might be looking for some safety. And that safety might not be the bonds anymore, which are supposed to be the most safe thing because you just can't promise you're going to get a meaningful rate of return. It might be the asset that's actually more risk on, that is antithetical to the concept of fiat currency in and of itself. And maybe that's why Bitcoin's getting some love. This is what Coinbase CEO Brian Armstrong had to say yesterday about the Clarity Act potentially coming through. Again, for those complaining about ads, I literally just checked while that clip was playing. They are on manual. Manual means that the creator has to insert them. If I don't insert them, then it can't be there. The only other two options are automatic and scheduled. Both of those means like every 6 or 12 minutes you get an ad. So I have no idea why you guys are seeing ads in the middle of the stream. I have not had ads on the stream for the past 4 years. I really don't know. I'm going to have to reach out to somebody, but that is very weird that you guys are seeing it today because it's the same settings I've had for the past 4 years. So if this is a different setting now, I have to go into the back end and change something. But yeah, I'm really not sure why that's happening, guys.
Hey y'all, Brian Armstrong here. We just left the White House where the president hosted a number of crypto CEOs and finance CEOs to talk about how we make America the crypto capital of the world. His administration has put out tons of improvements. The Genius Act got passed into law. Chair Atkins and Selig have already started publishing clear rules. But the big topic of discussion was the Clarity Act, which is coming up for a vote. A full Senate floor vote, September 15th. It's really important that that got floor time scheduled amongst all the competing priorities. And there was a lot of energy in the room to get it over the finish line. Contact your legislators, go to standwithcrypto.org and let them know how important it is to get clear rules in America and to vote yes on the Clarity Act September 15th. And thank you to President Trump for hosting all of us. We'll keep you updated.
September 15th. That is what they're aiming for. I'm putting a chat or a poll in the chat. Do we think crypto is back? Is crypto back? Yes or no? What do we think? I want to say yes, because again, it feels like Bitcoin is bottomed, given every piece of bad news you can imagine has been taking place over the past couple of months. The whole July deleveraging event and Bitcoin barely budged below 61,000. This is basically like a $10,000 candle over the past 2 weeks, which is pretty exceptional. It was like a $7,000 candle yesterday. 64 to 71 in one day. We haven't seen that type of gain in a long time. The highest Bitcoin ETF volume and inflows we also saw yesterday since early May when we were at 80,000. I mean, it's exciting. It's pretty interesting. And, ETH is going to run. If Bitcoin's going to run, a lot of these assets that have kind of been dead for a while are coming back into play. Robinhood, obviously getting some love from Bitcoin, $100. That's up 4.5%. If we get a rate hike, I think it will destroy all the progress that we're seeing in crypto. Ironically, maybe it makes crypto the hedge, which I doubt. But like, if that were to happen, that would be kind of the true essence of Bitcoin. But if that takes place, then I think, growth stocks and crypto take a breather. I don't think we're going to get that rate hike. If we don't get the rate hike, then it's just a question of when we can get some clarity on this war. Trump yesterday didn't really give that much clarity on what's happening with Iran. He continued to say the same stuff that he's been saying over and over again, which is that, we gave them a deal and it's up to them to accept it. And if they don't accept it, then, that's their problem. So I don't know if we're going to get any meaningful progress on what's happening with Iran, but this is what Trump had to say yesterday when being asked about it.
Turn people out.
Mr. President, I want to ask you about Canada, but first, the Treasury Secretary says that we could see the most impactful sanctions on Iran this week. When will they come, and what else could be sanctioned on Iran?
Well, we have things that we could sanction. We have very draconian sanctions, and we'll see what happens. Right now, the strait is open. A lot of boats are coming through. People aren't reporting that, and that may slow down a little bit at some point. But right now, a lot of boats are coming through. The naval blockade has been extremely effective. Literally while it's up, and it's been for quite a while, except for a couple of little pauses where we opened it purposely with a deal, but the deal didn't terminate. The deal didn't turn out to be what they said. When they tell us one thing and they do another. But the blockade has been 100% successful. No boats have gotten into Iran, but they are getting in for other places. But we'll see. We're going to see what happens. It'll either be extremely good and oil prices are going to drop like a rock, or we'll continue to do exactly what we're doing. They were talking about $350 a barrel, and it's today 84, 85. And we are getting a lot of oil out. But the other thing that's happened is people have found other alternatives, which they never thought about. Texas, Alaska, Louisiana. and other places. In addition, a lot of pipelines, record numbers of pipelines are being built. So I think the Hormuz Strait's not going to be quite as important as it was in the past.
Yeah, on Canada, if I could ask you,
So Trump is right. There have been some ships that have passed through. It's not at the level of volume that it was before the war, but some ships have passed through. I think that's his claim for why the strait is open, even though technically it's not actually open to the majority of traffic. So the broader question here, as you can see, Trump seems very nonchalant about it. He's not like being overly aggressive with his rhetoric or any of stuff like that. He's just kind of saying the same stuff he's been saying for a while. I think he's also started to acknowledge that at some point, either the Iranians are going to capitulate and they're going to accept our offer, or we're just going to live in a world in which the strait is closed. And we're going to keep drilling as much as we can in the United States, Bitcoin passing 72,000, and we're going to try to have that oil get dispersed across the world and maybe try to delegitimize Iran's influence. And if that were to happen anytime soon in any meaningful way, which is a long shot to say that would happen, quicker than not, that would probably give the Iranians less leverage and they would want to negotiate. So I think it's just a back and forth that we're going to have to deal with for a while. It does not feel like this month it will be fully resolved, but going into the midterms, I would imagine if they have any level of sanctions relief or potentially more aggressive sanctions, the Iranians already don't care about hyperinflation and their economy, all that stuff. Maybe it gets bad enough for them to finally come to the table. But we just don't know. And, until we find out, we're going to have to see what the market ultimately thinks about this. Last thing we'll say on crypto, and then we'll move on to some other headlines. Trump, he's mentioning the stuff that crypto natives want him to mention. So Hyperliquid, which some of you guys know about, it's not the most mainstream crypto platform, but it is a exchange that essentially allows perpetual futures contracts to be traded, which is an inherently crypto native product. It's just like a better version of a call option. They're banned in the United States. Hyperliquid is like the biggest global exchange that allows people to use 10, 15, 20, 30, 50, 100x leverage on pretty much any asset that exists, whether it's NVIDIA, Microsoft, Bitcoin, etc. And Trump actually mentioned them by name yesterday and said, we're working to bring them into the United States.
Friends of ours that are on the board, and they'll be here in 2 weeks, I understand. In May, Chairman Selig authorized the first ever true Bitcoin perpetual futures contract on a CFTC registered exchange, first time. I understand that Mike is also working to bring Hyperliquid into the United States in a fully compliant and legal fashion. It's working.
As soon as he said that, Hyperliquid, the coin, it's called HYPE, hype, went up, but PER, which is a Hyperliquid Treasury, went up 30% yesterday. Who disclosed in their 13F that they bought some PER? None other than the mentor of our latest Fed chair, Stanley Druckenmiller. It's one of those things where it's like, really, Stanley Druckenmiller's buying a crypto treasury company around Hyperliquid? It's not MicroStrategy, not BM&R, right? Those have all the attention. PER, I knew about PER 6 months ago. I didn't end up buying it. I looked into it because I started to look into Hyperliquid 6 months ago as I was learning more about perpetual futures. But crypto treasuries in general, obviously bad experience with them, didn't really want to get into it. However, if the underlying asset in the treasury is like ripe to take off, the treasury is going to, trade at a crazy beta towards it. And our boy Druckenmiller degened into PER, but maybe it wasn't that degenerate because maybe he knew, because, the guy who's the Fed chair was under his wing for 30 years. Not saying that Kevin Warsh said this or anything. I'm just saying, sometimes people at a little dinner party have some conversations and things come out, and maybe Drux knew that Hyperliquid was getting ready to be legalized in the United States. Quite frankly, if you just took a bet on Trump as like the crypto president and fulfilling his campaign promises of bringing crypto to the United States, you could also have a thesis that Hyperliquid would eventually come to the United States, and that obviously would be very bullish for a Hyperliquid treasury. So the point is, it feels like there is excitement and momentum coming back into the crypto ecosystem. And the fact that that's happening is very, very exciting. And so we just have to see, if that continues. Nebius right there, that's down about 1.3%. Nebius increased their convertible notes to $5 billion today, 4.5 to 5 billion. And so I think that's why that stock's down a little bit, but all the semis are kind of getting hit in the pre-market based on oil prices going up. Micron as well, 928, as that is continuing to go down. Now, our boy Tom Lee, obviously BM&R, that is something that if it comes back, many people will be happy about, including myself. Yesterday kind of confused me. Tom Lee came out and said Robinhood is the stock to avoid in 2026. And I still don't fully understand why he said that. If anyone has the reasoning behind it, I would love to know, but like he said, you should buy JP Morgan and Arista Networks and you should avoid Robinhood, which is kind of confusing because if like crypto actually takes off, I feel like Robinhood's going to be like the #1 platform where people go to get excess excitement. And it's also weird because on a podcast he did a few weeks ago, he said Robinhood has a chance of being a Mag 7 one day.
I think it might be $10 trillion just to get into the club.
Correct. So one of these companies, now it could be JP Morgan, it could be Robinhood, will be a Mag 7. You know,
Any others that are on your radar?
You could say basically like, hey, Apple has a customer relationship. You know, Google and Meta have a customer relationship.
So it's weird, right? It's a little weird because it's like, okay, hold on. Why is he saying avoid Robinhood in 2026? I'm like, I don't really care. Like, it is what it is, right? It's not that big of a deal. It's just, I don't understand his logic behind avoiding it. And then he says 2 weeks before that podcast or before that statement that he came out with yesterday, Robinhood could be a Mag 7. Now, maybe he's saying, look, it's not going to happen in 2026. I think long-term it's bullish, but I wonder what he knows about Hood for 2026, because I'm also wondering, because Hood's been depressed all year. Obviously, the valuation is up there, but the growth has been amazing, and trading volumes have been massive, and crypto's coming back. So I would imagine you're getting a kind of perfect storm where, you know, they crushed it in the World Cup with prediction markets, got the NBA, NFL season starting. I'm trying to figure out what bear case he's looking at to say buy JP Morgan over Hood, which JP Morgan might well perform Hood for the next 5 months in 2026. It was just a bit confusing. It was just a bit confusing to kind of hear that. So I'm not sure exactly what the take is on that, but yeah, he is saying to avoid Robinhood for the rest of 2026. And then obviously if Bitcoin and ETH come back, you could see some more momentum across a variety of those different assets that we have. Rocket Lab just took on their launch 7 minutes into the launch. June is saying it's successful. That is great for the lab of rockets, 7474. Unfortunately, Rocket Lab has been stuck, and that leads us into some of these other headlines. So SpaceX is down about 2%. There are 310 million shares that are being unlocked today for SpaceX. So this is something I think a lot of people forgot about, including myself. I didn't even realize this morning that was going to happen. But 319 million shares are eligible for trading this morning. That could put some pressure on SpaceX potentially. That could also put some pressure on the other space stocks that, I mean, I look at these charts every day. Rocket Lab is a stock I tend to trade more often. And I mean, dude, SpaceX goes down, Rocket Lab goes down, it flips. It's like it's so weird because before SpaceX was public, you know, the space names traded with their own set of algorithms. Now there's this like proxy that you have to hold the space names accountable to. Same thing with Robinhood and Bitcoin 5 months ago when Robinhood was stuck at like 60, 70, like every little tick with Bitcoin, it would go up or down with. Then it kind of diverged. Now it's, you know, now that Bitcoin's breaking out, it's starting to break out a little bit more as well. So it's not fully diverged, but it did for a good 2 months when Bitcoin was stuck. Robinhood was up 40%. And so it's one of those things where I wonder when the space names diverge from SpaceX, but almost every day they're kind of in that same route. And it's not one-to-one, but I'm telling you, if you look at the charts and just like see how they work throughout the entire day, they start to move with each other. So if SpaceX gets hit, then, you know, maybe Rocket Lab and some of the other names could also potentially get hit. What do you think about Coinbase versus Hood? I've always been on the side of Hood just because I think it's a more diversified business model that can actually have, you know, different streams of revenue. However, Coinbase will be higher beta to Bitcoin, and if Bitcoin really takes off, Coinbase probably outperforms. I think Coinbase's multiple also isn't as aggressive as Hood's, but Hood's growth is like just astronomically better than Coinbase, simply because they have more services, right? They're a full suite of financial products, not just crypto. Coinbase, right, they're up 5.9%. It was up 9% yesterday, so you're seeing a lot of that momentum come back into some of these broader crypto names. Do you think he's afraid that Hood is a major threat to BM&R and crypto-reliant companies? No, I think people on Hood buying Ethereum helps BM&R, right? Like if you have more people on Hood that are buying ETH, yeah, Robinhood makes money on the transaction fees, but Tom Lee really needs ETH to go up for Bitmine to go up. So I that's why it was confusing, because, you know, he's been such a fan of tokenization and this whole super cycle that Vlad's been talking about. Robinhood is literally building on a layer 2 for Ethereum, which is once again helping Bitmine, which is buying up a crap ton of Ethereum. So it was kind of just confusing the way he articulated it, because I would imagine all of these names kind of in the same sector would do well. But nonetheless, he said that's a stock to avoid for 2026. Walmart, they had a good earnings, but the market doesn't like it. And that's particularly because Walmart said the consumer is stretched. Walmart said higher gas prices are a concern, and Walmart had its slowest U.S. sales growth in over 6 years. The market thought there would be 3.4% sales growth. Walmart ended up coming in at 2.6%. It is something to take a look at. I mean, this is not growth deacceleration that we have seen in over 6 years for Walmart. We keep seeing all this data from other companies that the consumer is healthy, Starbucks, American Express, Uber saying the consumer is okay. Then you have this consumer confident data that went the opposite direction last Friday. Retail sales missed by about 800 basis points. So you start wondering, like, is the consumer actually okay? Because Walmart is the place where consumers are supposed to be okay. Like, Walmart is not the most expensive place in the world to shop for anything. I mean, Walmart did 190 billion of revenue. They brought 5.9 billion of that to the bottom line. I mean, you're talking about a company that does not have the best margins in the world. And that's because, they eat so much of that cost, even with the rising price of inflation. So if consumers are a little bit more tapped out, initial jobless claims, Street wanted 210, came in at 206. So nothing super concerning right there, but you did have 206,000 people file for unemployment, a little bit lower than expected. If that ends up becoming a concern, it's good for interest rates to come down because the market will say we need to protect the labor market. But if it ends up hurting earnings, which again, I think earnings are more rooted in CapEx than anything, do earnings start to be judged based on the consumer like it was 3 years ago? Because right now it seems like all earnings are basically a proxy for what's happening with CapEx. So, maybe the consumer starts to matter, but if they don't, I think the market continues its grind up. If it does, and those Walmart earnings might be a little bit of a preview of saying, hey, the consumer is not perfect. But then you had Estee Lauder that had great earnings yesterday. That's all based on the consumer, and Elf had great earnings. So it's kind of confusing. It's like, okay, so people can buy lipstick, but they can't buy basic goods. Like, what exactly is going on? From Trump's perspective, what would fix this is just bringing rates down. And this is what he said yesterday around interest rates.
Well, I think it is, but I mean, it's very sad. Every time we do great, we announce great numbers, the interest rates go up. And they go up because they want to stop inflation. They should go down because the country's strong. I see countries like Switzerland where they're the number one lowest interest rates, 0.5%, and we pay 3.5%. And yet, if we stop doing business, for instance, I have the absolute right to cut off all business with a country like Switzerland, like anything. So why are they prime if I can cut off the business and they are no longer functional? And yet they're considered to be like an elite country. And I don't want to single them out because there's 60 countries like that. They live off the United States. So why are we paying higher interest rates than them? In the old days, we used to pay the lowest interest rate, no matter how we were doing, because we sort of generate for the whole world. And I want to see it where interest rate, and I have to tell you, we have a wonderful chairman. I think he's doing a great job. The problem is he has a board, and it's a political board. It's people put in by Obama, Biden, and me. And there are quite a few members still left, as you understand. And so they vote to raise interest rates. I don't know if they're doing it because they think they're doing a good thing or because they like the politics of it. But my point is, years ago, 25 years ago, when the country announced good numbers, interest rates went down because we had a stronger country. Now, when we announce good numbers, the better they are, the worse it is for interest rates. So we could have a GDP of 10 times. They say, it's going to be 3 times or 4.1. We could have a GDP of 10, 12, 15 times if they just leave us alone. Let the rates go down. We should pay the lowest interest rates. Every point of interest is $600 billion. Think of that. Every point of interest is $600 billion. 2 points means we make a fortune, but we keep driving it up. It's a very unfair system. And I've said it now for a long time. When our country does well, interest rates should go down.
So, again, Trump is not happy about what's going on with interest rates, and he hasn't been happy for a long time. But the broader question is, his war in Iran is part of the reason we can't bring these rates down. I think interest rates should come down from here, but at the end of the day, if oil is pushing 4-year highs, it's not going to happen. There's just no Fed president or Fed member, especially in a world in which there's already so much concern around the credibility of the Fed, that's going to meaningfully get any of these rates to come down aggressively. So SMCI, by the way, just completed an independent investigation into a March indictment of 2 employees. The board fully adopted new recommendations. Independent advisors found no evidence current senior management knew of the alleged diversion scheme or actual diversion of restricted products. Okay, so SMCI is saying that we knew nothing about this. I wonder who audited them. What auditor is putting their name on this? They said senior management knew of no alleged diversion scheme. All right. Same senior management that didn't know they were cooking the books 3 years ago. SMCI 3710. That's up 1.4%. Still up a lot from earnings. It was like 25 before earnings. But obviously still low from that $50 range it was at in June. So anyway, Trump doesn't want these rates to go higher. I don't think anyone does, but ultimately it's going to be a while until I think we actually get that rate cut. He is right about the interest payments. We are spending more than $1 trillion. I mean, if we actually get rates at the level that, you know, some of the Fed members wanted at, it's going to be $2 trillion per year, which is going to be 30% of the tax revenue that we collect just for financing our debt. And I don't know, it just doesn't feel like that is sustainable in any meaningful way. S&P 500 right there, that's down about 0.46%. So some of the issues we have is these Walmart earnings that the market didn't love, the SpaceX 319 million share unlock, the rising bond yields showing that there's not been that much of an impact based on what Bessent did yesterday with the buybacks for the Treasury, and then the broader sentiment around some of these semiconductors actually taking a little bit of a hit. And let's see if that sets us up for an ugly day again today. Yesterday was good until it got ugly, and then it kind of continues to stay ugly outside of some of the crypto names. I mean, Intel almost pushing below 90. Cerebras back down to 213. This was at 250 on Monday. Like a lot of these semiconductor names. The problem with the semi trade right now as well is like July 29th was the bottom. We had an epic rebound, and now that rebound has faded a significant amount, even though these stocks are still up a significant amount from the July 29th bottom. So the question is, are we just going to be stuck? Is Micron just going to be stuck around $800, $900 for the rest of the year? You know, like is SK Hynix going to be stuck at 150s? Nebi's going to be stuck in the 220s? Like, are we just going to be like choppy consolidating and fully growing into these valuations that the SMH has been able to appreciate into? SMH still on the year, even after that drawdown from July, is up 50%. I mean, this is an ETF that's up 50%, right? So maybe the next 6 months is this just consolidating. I'd find it hard to believe that it's only going to consolidate because it's so volatile, right? Either it's going to massively break out or break down. But if it is just consolidation, maybe that's not the worst thing in the world either. So that's what we're going to have to see. Yeah, mRNA continues to go red pre-market. They spiked it up aggressively yesterday. I heard a lot of people yesterday just saying this move doesn't make sense. I mean, they're very happy that these trials are working and stuff, and they hope more of this happens. But the move itself up 170% didn't make sense. Down 11% right here. So we're going to have to see if more buyers continue to come in this for well. Jeremy, thank you for the super chat and the compliment. Ray, thank you as well. Appreciate it. Yeah, I just didn't feel like wearing a hat today. I said, you know what? Screw it. Just gonna let it all flow out. My hair is actually a lot shorter than what it was a year ago. So I don't know if we're going to fully grow it out. I've been growing the beard back out again as well. So just look at my arms, bro. My arms, my arms were this hairy when I was in 3rd grade. It's dead ass. My arms were this hairy when I got bullied for it. I came home. I was like, Mom, can we like shave my arms? She's like, what? I was like, yeah, the kids are like calling me Chewbacca. And she was like, don't be a bitch. I'll never forget that. I will never forget that. She said, she literally, she said, don't be a bitch. And I was like, you know what? You're right. You're right. I was like low-key about to cry about it. She was like, don't be a bitch, bro. Like, just not going to shave your arms in 3rd grade. But I was like, Mom, why are they so hairy in the first place? Like, I'm in 3rd grade. Like, what's going on? Like, 6th grade, I'm developing a beard. I'm like, what are these Indian genetics, bro? This is crazy. Like, I like that I have a lot of hair, but I'm also just like 3rd grade. Like, this is kind of crazy. Yeah, she said, don't be a bitch. So ever since then, nothing has affected me. Meta, this one continues to be in the doghouse, 546 right there, below 550. We're going to see if this one can make another move. Micron slightly flipping a little green. Rock Lab down 1.2%. And then SpaceX right here continuing to be down 1.2. Palantir at another conference yesterday, or Institutional Sovereignty Bootcamp. Palantir right there, 175. It's been holding the 170s really nicely. I know it hasn't broke out into the 180s, but the fact that it's holding a 40% move and not giving any of it back, I think is very impressive. and, hopefully can continue to hold on to that move as well. By the way, a lot of people are saying Bitcoin bottomed because this was the video a couple of days ago from our boy Kramer selling all of his Bitcoin, and maybe this is what we needed to go higher.
Arvin Christian knows quantum incredibly. He knows Bitcoin and quantum, and I'm going to sell mine.
You are?
Yes, absolutely.
Really? Just on what he said?
Well, he's the man. He's the man. 3-4 years, David. You know when 3-4 years is going to happen?
By the way,
tomorrow?
Did he give you any reassurances in terms of what happened last quarter?
I felt, yeah.
So he sold it because of the quantum concern, which I am not an expert enough on quantum to know if that's like a legit concern. But I mean, I don't think the market cares about the quantum stuff right now. The market cares about liquidity. The market cares about Clarity Act, and hopefully a lot of that stuff can continue giving momentum back into it. I mean, could you guys imagine if Bitcoin actually makes a run for 100 by the end of the year? And when it runs, right? So like if it does do that, it could create a whole new layer to this bull market. But I think we're going to need the Fed to be cooperative here in order to make this happen. All right, so we've got 1 minute. Thank you all for being here. We have a bunch of different headlines. We're going to see how this market reacts. We have some more macro data coming up. Hopefully, we can have a relatively green day. In about 30 seconds, I will ring a bell. For those that are new here and have never heard the bell, you will hear it and consequently wake your ass up, because this will hopefully get you out of bed. If you've been here every day and have been watching for the past few years, you already know that there's going to be a bell. Hopefully, if you've been here every day and watching, you choose not to mute the stream, because muting the stream would mean you don't get to wake your ass up. It is Thursday, August 20th, 9:30 a.m. Refute the mute. The stock market is now open. Someone said, is the bell hairy? That's crazy. That's actually crazy. All right. Wake your asses up. Let's get into it. Robinhood opens up at 100. That's up 4.9% on the day. Robinhood opens up green. Wow, NVIDIA. They take her down right at the open. What is that? What is that candle? Take her down right at the open. They can't even let her hold 220, 217 on NVIDIA. We do have NVIDIA earnings next week, which is also going to be really important. I think there are some jitters, which is why the semis are kind of struggling a little bit. CoreWeave, they actually signed a new deal this morning with a trading firm. CoreWeave giving up the entirety of the earnings game, but they did sign a new deal this morning, $90. That's down about 1%. Broadcom, which got hit yesterday after the Marvell news, that's down 0.5%. Applied Digital, that's down 0.5%. Reddit's down 2%. The fear on Reddit, once again, is search traffic. The fact that the entire S&P 500 move has been reversed, I think is pretty incredible, but it goes to show how big the fears are from the street. I think at this point, it's up to Reddit management. I mean, the stock has round-tripped 150 like 3 times in the past month. It is up to management to really communicate why this is not a concern. And until they do that, I think the stock is still going to be in the doghouse. Obviously, the growth is incredible, but the perception of the fear of search traffic is the reason why I think the stock has been taking a hit. Marvell right there, that's up 2%. Webull up 10% after great earnings. Intuit, that's up 0.5%. Adobe, that's up on the day. Amazon, that's down 1.3%. Moderna is down 14%. It hit 195 yesterday. 14% down on the day, still up 120% from yesterday. Circle, that's up 2%. Getting some love on Circle. How about Mr. Micron? Micron, 946. Okay, Micron with a big pop. Haven't seen that in all of the semis this morning, but Micron getting it, 945. NVIDIA, 218. That one flips green. That's probably why Micron's green. Okay, so they dumped NVIDIA at 931, and they're pumping it at 932. Just goes to show the volatility of these semiconductor names, especially these large caps. 218.58 on NVIDIA. SpaceX, 300 million shares unlocking. That's down 1.65%. Baba did not have the best earnings. Baba down 4%. These Chinese companies aren't really putting up significant growth, to be honest. I mean, like, you're just not seeing a lot of excitement from their numbers when it comes to overall earnings growth. And I think that's part of the reason why these stocks have been flat. Revenue, I mean, look, Baba's growing revenue at 9%. Like, what's going on here? Google's growing at 20%, Meta's at 30%, Microsoft's at 18%. Why is Baba at 9%? EPS is down 42% year over year. Like, we're in one of the biggest AI revolutions ever. China has, more than 1 billion people. These tech companies should be servicing those people with these cloud computing platforms. Quen has been downloaded 3 billion times. Like, it's very confusing why Baba is not getting that type of growth that some of the American tech companies are getting. But it's also not confusing because obviously it's the CCP. Webull right there up 12%. Marvell 242. That's holding on. SMCI, maybe that investigation detail they put out today starting to clear out a lot of the bad energy around it. 38.43. That's up 5%. As that continues to go green. AppLovin, are we below 300? Not yet. 311. We are very close. Street's not letting it go below 300 yet. Walmart is down 8.7%, largest one-day decline since July of 22. You can't even really blame Walmart's execution. Walmart's not a company where it's purely execution-based because they're not a tech company. It's really a company based on commodity pricing, inflation pricing, and then once again, the health of the consumer. So it's not a good thing to see this down 8% unless there's something deeper around how they messed up in certain areas of growth that were in their control. But a lot of time, the only thing they control is prices. And if prices go down, the margins go down. If consumers aren't willing to buy even after prices go down, that's a consumer issue versus a Walmart issue. So that stock down 7%. Walmart year to date, I don't think it's been the best year. Year to date, 6%. Including today's decline. Intel right there, that's down 1.5% as your semis are selectively going up or down. Apple, of course, is going up as the rest of these high speculative beta names are going down. 319 on Mr. Apple. The Micron CEO is going to be live in a bit. Once he goes live, I will turn him on. I do not see him live yet. Besant's also. We haven't heard from Besant in a minute. I miss Besant. I'm going to be curious to see how he articulates this Treasury buyback that the Treasury is engaging in now for increasing liquidity around bonds. Rocket Lab 73.76. JP Morgan, Rocket Lab going down 2.7. Nebius 218. Nebius has given back a lot of those gains, 280 to 218. I mean, I don't think it goes below 200, but that's only another 10%, right? So if it does go below 200, it wouldn't be that hard to imagine. 54% of you said we are back when it comes to crypto. S&P, that's down 0.2 per hyperliquid strategies. That's down about 1.4%. That was up, again, 30% yesterday. Okay, so the indices are not really getting hit. It's, once again, individual stocks. The Q's down a bit right there. Micron up 1. Maybe they're anticipating the CEO to say something this morning as well. 948. AMD, that was 520 on Monday. It is now 475. So at least that's up from 459. You got a nice little candle right there. Up about 1.7 as well. I love the new basis points episode. Yeah, it was pretty fun. We interviewed a ex-quant, ex-Wall Street quant, and he kind of really explained how the market makers and a lot of this stuff happens behind the scenes, and really how an order gets routed and what's the point of having Citadel and all these companies participate in all this stuff. Some stuff that's good, some stuff that's bad, but that was a very interesting discussion. SK Hynix 164, that is also up 6% on the day. Volume once again, 9:30 to 10:30 is supposed to be where the volume comes in. It's not that aggressive. Once again, Micron 952, but you're not seeing a decent amount of volume being traded. Robinhood losing that entire pump from 100 to 96. Bitcoin losing about $500. That's why Robinhood probably lost a little bit right there. And then Ethereum from 2280 to 2269. Tempest is up because of their partnership with mRNA. The street seems to really like it. I mean, it was up 15% yesterday, up another 7% today. Obviously, there's good sentiment around what mRNA announced yesterday. So what Moderna announced. So Tempest partnering with them probably gets the market to be excited, along with healthcare and AI being kind of the most obvious beneficiary from all this AI innovation, drug discovery. UNH back up to 388. So you're seeing healthcare get a little bit more love. Oklo is 42.50. That's down 1%. How about HIMS? Is that getting a move? HIMS is up 4. HIMS is up 4. It was basically at this level before the earnings came out, and now it's kind of recovering back to that area again. Micron CEO will be live. He's not live yet. As soon as he's live, we'll go to him. And we will see what he's saying. There was a report out by Bloomberg today, which was interesting. Meta is now spending hundreds of millions of dollars a year on Microsoft Azure AI services, making Microsoft's one of the largest Microsoft customers when it comes to AI. Microsoft right there, 481. That's flat. Meta is reportedly consuming trillions of tokens weekly through Azure, including using OpenAI models to evaluate its own AI outputs. At the same time, Meta is building its own multi-model AI API service that could eventually compete with Foundry and reduce its reliance on Microsoft. So you are starting to see a lot more excitement from Meta in general with the amount they're spending on Microsoft. Having said that, a lot of these guys are just throwing money at each other. And I think the market is more concerned if Meta could create its own external compute business like Microsoft has to sell to other people. Meta right there, 547, as that continues to slightly go higher. DRAM, that's getting a little bit of a pump. Take-Two, guys, you know what's interesting about this name? And someone answer this question for me. With all the hype around GTA 6, all of you guys are saying it's going to be like the biggest game of all time. Why is this stock down 6% year to date? Like, how is it not being priced in at all? Like, I would think the stock's up like 30% just off the anticipation that the earnings is going to be so massive from selling GTA 6. Does the market really need to see the game succeed, which means there's now an execution risk on the game succeeding, which, look, I think it's going to succeed, but what if it doesn't succeed as well as people think? Like, why are people excited about this name before the game comes out? And why is it not getting any level of premium for the game? Or is the company so desperate for the game that the fact that it's flat this year is better than being down 30%, which is what it would be if the GTA 6 wasn't coming out? Like, this one's kind of confusing to me. Yeah, it feels like it's to sell the news. Or it should be a buy the news if the game is that massive. But everyone knows the game is going to be massive, and everyone knows Nvidia trying to get to 220 that the game is coming out in November. So I was kind of shocked yesterday to look at the price action and be like, why has it been flat? And no one even cares. Dude, even if the game was leaked, I don't know if that's true, but some of you guys say even if the game, this thing is going to sell a lot of copies. Like, this is GTA 6, right? It's been 15 years, so even if there are some issues or some leaks or some qualms, like, I would still imagine people are going to be super excited for this. And I don't know, Street's not pricing it in as aggressively, I think, as what we thought that would happen. So we got to see. But Take-Two, it's up nicely over the past 5 years, but over the past year, it really just hasn't done much. Meta right there, 546. Hims up 3.72%. Elf, that's down 1.3. Bloom, that's down 1.3. Bloom's been stuck in the low 200s. SanDisk, has this made a move? 1608, that's up 2.4. It was at 1800 on Tuesday. But now it's starting to come down a little bit. Vlad did speak at the White House yesterday. That is correct. He thanked Trump for the Trump accounts, talked about tokenization. You had all the big crypto guys that were there yesterday, which I think was also super bullish for crypto. GTA 6 was priced in 4 years ago. I mean, then the 5-year performance would make sense, to be honest. But even if you assume the worst case scenario, like, you would think people would be excited about the game and the stock would have a little bit more juice to it. And it just doesn't. So maybe the market is just waiting to see if the game is a big hit. Moderna down 17 right there, as this is getting hit. GTA 6 was announced in 2023, so it's been pumping since then. It's already priced in. Okay, so then why are people excited about it? It's priced in then, like, because there's hype around the stock. Like, I was looking at the stock last night and just like reading through some of the stuff people are saying on Twitter, and I'm like, why do people care? Like, if the earnings growth should be priced in from this, unless it's going to blow away expectations, unless there's just something deeper to it that I'm not fully seeing right now. UNH 388, Tempest up 6%. Is the Micron CEO live? Not yet. He's about to be, but not yet. Marathon, that's up 9%. All these Bitcoin miners turned AI plays. I mean, they still have Bitcoin on the balance sheet, so they're probably going to be getting a little bit of a pump right here based on Bitcoin going higher. Can you cover Nebius senior convertible debt? It looks like there was more demand than expected, so they upraised the offering from $4.5 billion to $5 billion. I mean, the stock probably should be down 2% because that's what happens when any of these neoclouds announce, and it was down 10% yesterday. I think the market just has to digest the dilution, which is going to inevitably happen over and over again in these business models. You're betting that the rate of growth of their ARR is so much stronger than the, call it, bi-monthly dilution or every 7 months dilution that they engage in. And you kind of have to just hope that the growth is so strong there on the neoclouds that the dilution doesn't matter. And quite frankly, the dilution is not being used to, buy random stuff. It's being used to finance more GPUs and data centers, which ultimately leads to more growth. So you have to assume that margin gets there. And that's the critique of the neoclouds, right? Which is that they constantly have to dilute in order to be able to build more infrastructure. Nonetheless, this is why Jensen backstops them. This is why Jensen had that $500 billion deal with all these other companies, because he's trying to get more money into the ecosystem. But I think functionally, the most bullish thing about the neoclouds isn't even the neoclouds. It's freaking NVIDIA realizing that their customer concentration risk with Amazon, Microsoft, Meta, and Google is a big deal. 4 customers are 68% of NVIDIA's revenue, and they really are trying to diversify. And the best way to diversify is to get all these smaller clouds to buy your GPUs, exclusively your GPUs, which is why you give them better pricing and better terms. And that means those clouds have to stay in business. So I think the biggest bull case for the neoclouds is NVIDIA wanting to make sure that their growth is sustainable and expanding into the neoclouds, which is basically what that $500 billion announcement last week as well. And so I think inevitably the market's just going to have to price it in, but obviously when they dilute, it always makes them upset. Down 1.9% right there on the basis. Zeta, that's down 2%. Palantir's dropping. Our SaaS names going down. CRM goes red. ServiceNow, which had a great day yesterday, that one's actually holding up. ServiceNow up 1.3. Netflix, I think, is getting a little bit of a breakout from that 70 range that it was stuck in for the past couple months. Bill Ackman bought back in, getting some of the big names to be excited about it again. 80.96. Uber as well, getting some love at 79.58. Salesforce at 205. Okay, I think the Micron CEO is live. Let's hear what he has to say.
Important because memory is strategic infrastructure of AI. Memory absolutely requires higher performance. AI needs greater amount of memory, faster memory, lower power memory for AI to get smarter. Memory is the intelligence. So we're going to bring here, through Micron Research Labs, $10 billion investment from Micron, bringing together our customers, universities, startups, ecosystem partners, and of course, Micron researchers and scientists to drive research in materials, semiconductors, memory, compute, how to bring them together and to drive innovation for the next era.
I think for people at home, we've got to get them to understand the memory. They say, oh, well, what is that? The cortex? Where's that? No, when we think memory, what we're talking about is a specific type of chip that frankly had been the stepchild both to the CPU and to the GPU. CPU being the old days Intel and AMD, GPU, of course, Jensen Huang. Why is memory now elevated? Why do we care so much about memory versus those other life forms that we always thought were superior?
Memory is no longer a component in a system. Memory is the strategic infrastructure for AI.
Commodity.
It's no longer a commodity, it is a high value. This is enabling value for our customers. Without memory, you cannot make AI smarter. You cannot make AI faster. You cannot scale up AI. AI is advancing. A lot of context is getting generated. All of that context has to be stored, has to be processed through memory. So AI is driving a whole hierarchy of memory requirements, from high bandwidth memory to DRAM to SSDs. And this is the exciting era for memory and critical need that all AI systems have.
I would argue it's an exciting period for the United States because you never gave up. You always thought that we could be great. We have to compete against Japan. We have to compete against Korea. And by the way, we know that SK Hynix, Samsung are incredible. Why didn't your company give up on this country? Everybody else seemed to have moved overseas.
Micron started right here in Boise nearly 50 years ago. We are the innovators. We have 62,000 plus patents today. And of course, we have believed in the vision for memory. We say memory, our vision will accelerate intelligence to enrich life for all. You are absolutely correct that even in the deep downturn of 2023, Micron was investing in leading edge research. Today, you see the benefits. We have the best technology and product portfolio in the industry. We were making investments of $10 billion in our, in our R&D and CapEx to drive in
I want people to understand that. It's a $10 billion Micron research lab, unlike anything we've ever had. and it is going to be located here.
Research lab will be located here. It will have satellite campuses around the globe where Micron has R&D operations as well. And absolutely, we are going to be having groundbreaking for that next year. And Micron Research Lab is really going to be driving America's leadership in semiconductor and memory technology.
I believe it. I believe it. That's why we are here. And Sanjay Mehrotra, thank you so much. Back to you, Carl.
Jim, appreciate that. You can watch a lot more with Jim and Mehrotra tonight on Mad Money at 6 p.m.
Okay, so we're not really hearing anything too different from Micron CEO. Bitcoin taking a little bit of a tumble right there, 71.4. I mean, what you're pretty much hearing is the same argument that memory is not a commodity. Wow. Damn, that thing dumped during the entire interview. 954 to 936. I mean, yeah, I guess that's what you got from Sanjay. He didn't say anything that was different. He didn't announce anything that was different, so I would imagine the street's not going to be excited. Did I say Matt Money? If I said Matt Money, I meant to say, or did they on CNBC say Matt Money? Matt Money does have Micron in his stock draft, so that's probably why they mentioned it. Micron right there, 933, down about 0.34. This thing has just once again been stuck in a range. The host said it. All right, well, it's probably because Matt owns Micron. SK Hynix, that's down 3.4%, as that is also getting hit. I mean, once again, it is a question of where the market is going to take this over the long. Oh, Mad Money. That's what it's Mad. Okay, now I get you. SK Hynix, 161. AMD, 467. That's losing it. AppLovin, 2%. That's actually up a little bit. Intel, I actually don't mind Intel going down, man. I would not mind adding more to my Intel position. I mean, kind of expected it was going to take a breather after that recovery, but also it continues to be down aggressively from that 147 level. One thing I did add late last night, I put it in order, ended up getting filled, is Uber. I'm officially in 74.90. 74.90 is my cost basis. 200 shares, not a massive, massive position. I don't really need a lot of Uber, to be honest, because I have Grab, and quite frankly, I think if Uber runs, Grab's going to run with it. Uber does own about 15% of Grab. But yeah, I mean, look, I wrote up my thesis on X on Saturday. I just think this thing is too cheap. And same with Netflix. I don't own Netflix, but I agree with Ackman on both Netflix and Uber. They're too cheap. Like, these are very high quality companies that are being discounted. Netflix has a bit of a more legitimate concern. You know, the content is not really stacking up to its potential, which is why subscriber growth has slowed down. But for Uber, it's this robotaxi thing, which I just don't think is that big of a deal. Having said that, I don't think Uber is going to outperform a lot of your high beta names by the end of the year. I think until that robotaxi fear is gone, and the risk is Elon announces an update on robotaxi and then Uber just goes down 10% for the hell of it, which could happen. But I've been diving deeper into the business. A lot of the business has nothing to do with mobility. It has to do with something that robotaxi is not even going to replace, and it's producing billions of dollars of free cash flow. And the street doesn't like it. David Tepper is buying. Brad Gerstner is buying. Bill Ackman's buying. I mean, look at some of the big guys that are just like, okay, this is kind of stupid. We're going to buy it. And I think eventually it gets its breakout. Broadcom right there, 363. That continues to go green. Intel still red. Vistra, this one got a lot of buys in 13F as well. My average price on Intel is 99.60. So down in Intel, but part of the reason I didn't buy a full position at 99 was for this moment. So let's see if we can get it back into the 80s and DCA. Palo Alto, the cybersecurity names took an ugly hit yesterday. And I didn't really see the headline for why, but it's continuing. I think the big headline, which is not really a headline, is the valuation of the cybersecurity names doesn't make sense. It just doesn't. Like, it really, these guys are growing less than 30%. The multiples that they're getting on their next 12 months growth, as important as Mythos is, like the growth in the cybersecurity companies is not living up to all the hype that we keep hearing from these CEOs about Mythos and getting hacked and all this stuff. So really, I think it's just perception that you need cyber in the portfolio. That's why it's getting bought versus the earnings being the most exciting. SpaceX under 135. You got 310 million shares getting unlocked today. Maybe some selling pressure right there, down 3.8%. Tanner made a good point yesterday. Like, if you believe SemiAnalysis's argument around SpaceX getting to 500 billion in ARR, why would you not just buy more NVIDIA? Elon explicitly said we have an exclusive relationship with NVIDIA. That 500 billion of ARR is only going to happen if they have like a massive amount of GPUs to license to whatever new neocloud partners that SemiAnalysis thinks they can do, that SpaceX can do that for. So it's like we're already being pretty aggressive, assuming 500 billion in ARR. Again, Elon said $1 trillion by 2029. Maybe it happens, maybe it doesn't. But you already have that aggressive assumption. If you're going to go that aggressive, wouldn't you want to invest in the company that's selling the GPUs at a 75% margin versus a company like SpaceX that then has to resell them? Like, so even if you take the super bull case on SpaceX, NVIDIA seems like the buy because Elon said we're exclusively buying from NVIDIA. Unless there's a different premium that enters into the conversation via Starlink, which, you know, Starlink is fine, but I don't know. I don't think people are, you know, assuming $500 trillion of revenue because of Starlink. I don't think Elon's doing it. Elon's doing it because of the neocloud business. Nebius getting wrecked right here. Okay, so Couch had some good analysis as well on Nebius. Let me pull this up. This is what he posted today. Again, he's been early in the stock for a long time. The old notes already represented 15.5 million potential shares. 98% of that dilution was already reflected in the fully diluted share count. In return, Nebius wiped off 800 million off the balance sheet and saved 20 million a year in cash interest. Effective conversion prices are set between 344 and 405 a share. Obviously, if you own Nebius and the shares convert at 405 or 350, you'll probably be very happy. Future dilution only triggers if the stock rallies massively from here. Yes, if the stock stays flat for years, the accretion penalty at maturity will hurt. This is less about short-term share count bloat and more about who can fund the AI cloud infrastructure race at scale. I think it's a very, very strong point of analysis here. Basically, Couch is saying, look, if the stock is flat for the next couple of years, when it converts, when all this new 5 billion of convertible notes actually convert in 2030, 2032, it's going to be very ugly for shareholders because in order for it to convert at a high price and for shareholders to get a benefit of that, the stock needs to be at a higher price. But if Nebius uses this money in the short term to massively grow, which is the whole reason why they're raising this capital and trying to get that ARR up into the $20, $30 billion range, then the stock price should go up and then the conversion shouldn't necessarily be that big of a deal. It's almost, you know, to an extent, it's like what Saylor's doing with Bitcoin. The difference is the conversion that you're getting on the MicroStrategy stock in the future is all contingent on Bitcoin, because if Bitcoin goes up, MSTR goes up. If Bitcoin goes down, MSTR goes down at a beta compared to the underlying asset. For Nebius, it has nothing to do with Bitcoin. It has everything to do with their execution of penetrating this TAM that is growing day by day around AI and compute. And so that's the bet on the neoclouds. But obviously that bet is going to require a lot more compute and a lot more capital in order for them to execute. Nebius right there down 3.5%. NVIDIA 217. That one is basically flat on the day. Jersey Mike's. What's the ticker for that again? We have not looked at this IPO. JMKE. It's up 1%. I think they IPO'd around this price. So this one hasn't really changed. Oil, are we still spiking? We were at 87 in the morning. We're at 86.64. Basent's going to be on in an hour. So we'll hear from what Basent has to say at around 11. I'm very curious how he's going to try to get the bond market to calm down because they are screaming right now. This 10-year continues to be at 4.7 and it's not really slowing down. At least the dollar is at a 3-month low, but the dollar being low while the 10-year is up is not really the best situation right now at this moment. Wow, SpaceX down 4%. I wonder if we lose 130. Yeah, I mean, why, look at this candle down. Like, this just looks like people selling, like employees selling. There's no catalyst on SpaceX. Rocket Lab just had a successful launch. Like, I mean, maybe you could say the semis are falling, SpaceX is trading with that, but it just feels like people dumping because they finally got access to be able to dump. And still, SpaceX is way above where it was like 3 weeks ago when it was in the low 100s. So it's still up a lot since then. So there's plenty of buyers for these shares. But it was, you know, touching 150 a couple of days ago. So we got to see if that actually can continue. Yeah, Nikita dumping. Dude, the fact that he left as the head of Twitter the day before the unlock was available. Hyperliquid strategies per, that's up 7% today. it did feel like he wanted to sell and take some profits here. Walmart down 9, dude. Goodness. Walmart is almost $1 trillion market cap, by the way. Before this, it was pushing 950 billion. Right now, it's at 820 billion. But that's down. Reddit also getting just demolished. 147, still down 2%. I have not looked into Figure. Roy likes them a lot. They basically, correct me if I'm wrong, they give you a HELOC using crypto as collateral, right? Like that's kind of their core pitch, is that they are using, you can borrow against your crypto assets. And like that's the pitch. I don't know much about the business model. I know Roy really likes them. I've just never looked into it. But in a world in which crypto goes up, I would imagine this is also going to benefit because your collateral value goes higher. And so maybe that's part of the reason why it's also getting some love, up 2.4% right now. BMNR 2153. They're also building a lot of this stuff on the blockchain. Yeah, I mean, that's fair. I've got to go deeper into them. I'm sure there's a lot more to the. I think the founder is the ex-SoFi founder, though, right? The guy who's building it founded SoFi. So there's a lot of fintech native experience that he has in this. S&P is down 0.3%. Would you start selling calls on BMNR? I think the volatility has finally peaked up a bit to like theoretically do it. The problem is the risk of selling calls here on any HUD, Coinbase, MicroStrategy is that what if this is the breakout? You know, it's a tough thing because it's like if this is the breakout, you do not want to be stuck in covered calls. If it's not the breakout, you really want the premium from the covered calls. So, you know, maybe you do half the position. It's one of those things where it's like you got to ask yourself, how bullish do you think this can become? I mean, look, the Trump announcement yesterday with all the tokenization stuff, I think that's definitely a reason for crypto to pump. Realistically, I think you're going to need either major legislation, which looks like it's going to happen in Q4, or a rate cut. And you're definitely not getting a rate cut, which to me was like the real big reason why crypto would move. So then it's a question of how much gold just went red on the day. How much will legislation really affect the perception of these assets? 10-year right back to 4.7. And you know, if the breakout's happening, I don't want to step in front of that. But it's been a long time. And I think a lot of the 4-year cycle stuff lines up in October too. So it's like, if all that comes together, then maybe you're going to start to see a bit more excitement. Do you think we could have another drop like July? That's what some people are calling for, right? Like we need a flush out. I mean, like some of the commentary I heard yesterday, HIMS right there, 6%, is in order to get yields to actually come down, not to do any of this fake pseudo quantitative easing, we need a market crash, and a bad one, to actually get yields to come down. In fact, I mean, people forget February of 2025 when the market topped, and then we didn't bottom until the taco on tariffs, which was like middle of April. Trump reposted a TikTok on his Truth Social, and this was a theory that a lot of us were talking about. Trump posted a TikTok of a guy explaining the theory. And the theory was the person explaining that Trump wants the stock market to crash so that yields can come down and that the US can refinance their debt in a better way. And the fact that he reposted it, I remember that day, I was like, oh crap, like this theory we had of maybe Trump is trying to artificially crash the market because, you know, markets were doing well in January and then in February it just kind of flipped, in order to get bond yields down. Maybe he actually believes in this because he's reposting this TikTok of this person explaining it. And then the markets crashed. Bond yields ended up spiking. So the opposite happened. The market went down 30%. Literally, the S&P went down 30%. We were at 4,700 on the S&P. And the 10-year went to 4.8. So like the exact opposite happened. Trump pivoted on the tariffs. The market went up 10% in a day. And then the 10-year finally started to calm down over the next 7 months because inflation came down. But then this Iran war had inflation come up. And so the earnings have kept the stock market up, which is why the stock market's not down. But the 10-year being up is creating some jitters for the stock market. So it's one of those things of just like, do we need the market to actually take a big hit again in order to get yields to come down? Because last time Trump tried doing that, yields actually went up. And so that's why the Basent stuff from yesterday was really interesting, because it's kind of them admitting defeat. It's like, okay, the Iran stuff's not working because we can't get a deal. The market keeps going higher, which means technically there's a lot more inflation theoretically in the system, which is why bond yields continue to go higher. People are selling off bonds, potentially even buying stocks. So we've got to step in and do some type of quantitative easing thingy majiggy, which hopefully Besant can explain more in depth today. And it didn't work because the 10 years back at 4.7. So he got that idea from the TikTok. Oh, when Trump watches the news, bro, Trump watches a lot. He consumes a lot of media. You got to remember, Trump has been in media his whole life. Like, he has been part of them. He's been doing all the talk shows, everything his whole life. So who knows? Maybe he did get some of these ideas, but yeah, it just didn't work. And so, when you ask, can we get another crash like we did in July, when everything's not working, and the only thing we really have going for us is that earnings growth continues to go up, which is, like, I would say a very, very important thing that's working for us. And the broader AI innovation stack continues to increase. Like, yeah, those are two things that I think should sustainably be able to hold the market. But if the consumer breaks, the labor market breaks, interest rates go up, inflation doesn't calm down. These are all macro things. This is why Leopold got screwed, right? Because he was so right on his thesis on all of these names that went higher and higher, like Bloom, SanDisk, Micron, et cetera, Intel. But the macro doesn't really care about your thesis. If the macro wants to go in the opposite direction, your thesis doesn't even matter. And so I think that's what we have to watch out for over the next coming months. And then, not to mention, we got the freaking midterms coming up. And every midterm year over the past 80 years, August, September, October tends to not be the best. I think we can avoid it this time because we've already had two ugly drawdowns, one in July, one in March. And usually you don't get those in midterm years. So, like, the epic drawdown ends up happening around that October time and then move on from it. But who knows? We got to see if it ends up happening again. High yield market at all-time highs doesn't make sense. Yeah, I mean, I think that's why we've been seeing some of this choppiness over the past couple of days. Uber 79.82, just below 80. Trying to get above it. He reposted it because it said Trump is a genius. You're right. That was the first sentence that I remember. That was the first sentence the dude said in the TikTok. It was just crazy that he reposted it because I wrote a thread about that on X, and that thread went kind of viral. And a lot of people were like, "This is kind of bullshit. Like, he's not going to crash the market just to get yields to come down." And then Trump reposts a guy who's basically like making a video of my thread, not literally, but he's basically saying all the same stuff I said in my thread. Chris was also kind of making this argument as well. And like, it kind of made sense, but it was so stupid that it didn't make sense. And then when Trump's reposting the theory, it's like, oh my goodness, like, he might actually believe this. And it didn't end up working. Circle right there, up 3.65% as well. Tempest getting a massive move. Pelosi and Kathy are deep into this stock as well. What if Trump watches the market open? That'd be kind of crazy. That would be kind of crazy. Maybe he saw how much Palantir was struggling back in April and then tweeted that Palantir tweet for us. That was also a crazy day, bro. Put the ticker in the tweet. But then again, it's not that crazy because he's done that for a bunch of other stocks since then. He did it for Micron. Remember that a couple of weeks ago when Micron was struggling? It was like the first time Micron went below 1,000. And like, he tweeted about how good Micron was. He specifically put MU in there. Like, after Trump, I don't know if we're going to ever have this type of content in chief dynamics that we past couple of years. But it has been pretty crazy to see how it's playing out. Here's some analysis on what's going on with our debt as we get ready for Besant.
North of $1 trillion. Yardeni with a great chart looking at the implied expense at 5% would take you to 1.5, 1.6 trillion, obviously well above what we spend on defense every year.
It's well more than 20% on the tax revenues where we already are with our current interest payments.
Yes.
And again, Sarah, what point, are we there? You say numbers like that, you start to talk about it consuming, let's call it as much as 20 to 25% of every tax dollar. It gets a little scary.
120% in 10 years, U.S. debt to GDP ratio. That's what we're looking at, 175% in 30 years. That's according to the Congressional Budget Office. Look, a lot of people have been warning about this for a long time, but you know what? They've been warning about it in Japan for a long time too, and that's been 200% to GDP for a long time, and that hasn't been a crisis. Look at
it hasn't. I do wonder. Most of their Treasury bonds, and correct me if I'm wrong, are held domestically.
Yes, they are.
Where they're not as beholden to the rest of the world, perhaps, as we are.
Yes, we have high foreign ownership of Treasuries. Japan is actually one of the biggest, if not the biggest. UK. China, and that's one of the concerns here. All of these are the fundamental concerns about treasuries that would make it hard for anyone, the U.S. government, to intervene, with these kind of short-term measures to keep yields from
$4 billion on a bond market of $5.5 trillion.
Exactly. Right? No, but it's more about the signal, and I think the signal is that Treasury is not okay with this and willing to do something similar to what we saw with the intervention in the Japanese yen. The other thing everyone's watching is the dollar, because if the dollar is a victim of all of this and the dollar weakens, that also could be problematic. It's come back a little bit, but keep an eye on this, because if the dollar weakens, then that can also be inflationary and could also put upward pressure on yields. And then there's the Fed. And what does Fed Chairman Kevin Warsh do with all of this? Does this tie his hands and make it harder for him to raise interest rates or trim the balance sheet? Because that, again, would be going against the administration when it comes to capping these yields.
Once again, there's so many variables that are intertwined to kind of make sense of what's happening. I mean, that's why the macro, I think, is so important to learn about, but it's also super complicated as you have yields higher and the dollar lower with stocks trading at an all-time high. Like, it's Kevin Warsh is definitely in a tough spot right now until oil prices come down. Walmart down 9%, Nebius down 3%, Nvidia barely holding on to any green. Where's Googs and Amazon? Googs is down 1%. Amazon's down 1.5%. Amazon has not really held up much of its earnings pump. I mean, it has, but it hasn't. That 280 range has been hit. Meta, once again, goes red. Tesla, 343, that bounced up yesterday. That's red. And then Microsoft also flat. Apple also flipped red. So even Apple to safety today has not done the best. The Walmart CFO is on right now. Let's listen to him and see if he can give some more insight on what's happening with the consumer.
Even with the acknowledgement that it looks like some of the weakness was the pharmacy business, right? Tell us what the story is.
Yeah, well, our business is strong. It was a good quarter for us. We grew the top line over 5% and grew EPS almost 20%, 19%. There's been a lot of focus on the U.S. comp, which came in about 2.5%. But very importantly, as you noted, we have the health and wellness business, which is about 10% of our overall business, and pharmacy is the largest piece of that. Pharmacy has been impacted by two things. Last year, there was a tailwind related to GLP-1 pricing of about 100 basis points to our business. This year, we have a headwind of a similar magnitude related to maximum fair pricing, or MFP legislation. If you normalize for that, our comp was about 3.5%, and we shared some of this in our earnings materials, but if you take that 3.5% comp and you go back and look at the last 10 quarters, it's very much in line and consistent with what we've been doing. In fact, I would say on that adjusted basis, the second quarter was the strongest that it's been in 3 years.
So because of what? Because of strong just consumer spending?
I think it's that our overall value proposition continues to resonate with customers. Consumers have been more pressured relative to the beginning of the year. Somewhat stating the obvious, they've been impacted by higher fuel prices. But we see that our business, and importantly, having a value proposition that stands for low prices and convenience, continues to resonate with customers. Just this quarter, we delivered twice as many units as we did a year ago in under 30 minutes. And 70% of our deliveries right now for e-commerce are same day or better.
Yeah, I mean, the other factor here that is inflating these numbers are the tariff refunds, which were huge in your case, as you paid billions in tariffs. So how much has that been a factor on the numbers and what happens going forward?
Yeah, great question. For the quarter, if you take the net impact of the tariff refunds, it was about 750 basis points of operating margin impact. So on a normalized basis, you take the 17.5% operating income, adjust for that, we would have had operating income of 10%. That's actually one of the best quarters that we've had. And comparing that to the U.S. comp of roughly 2.5%, we're growing the bottom line 4 times the rate of the top line. I think that really speaks to some fundamental differences in our business today versus just a few years ago, given the more diversified profit streams we have with things like advertising and membership, that those two alone are contributing to almost half the profit growth in the quarter. And for us, the implications in our financials are the incremental margins in our business are twice as high as the overall margin, which I think shows the core earnings generation power of this business.
Yeah, I mean, does it though raise any concern about the core business when so much of the growth now and the profitability is being fueled by e-commerce and advertising?
Actually, our stores, I would argue, are more important than ever before. In fact, they're doing more volume than they ever have before. Stores are not just a place that people go to shop. They actually serve as delivery nodes for us, and we have 5,000 delivery nodes in the United States that are located within 10 miles of 90% of America. We would not be able to deliver the amount of units that we do within 30 minutes or the same day if we did not have those stores. So we forward deploy inventory to those stores to be able to better serve our customers and members. So I would argue that stores are perhaps one of our greatest assets.
John David, one of the touch points that we can keep coming back to, we have all summer long, and we hear from corporates, is a comment from you back in June when you said that shoppers were buying fewer than 10 gallons on fill-ups on average for the first time since 22. You said it was an indication of stress. Has that gotten better or worse?
It's marginally increased. It's just above 10 gallons right now, Carl. So we continue to see some stress on the consumer. And if you just take the second quarter as an example and you go month by month, in June we saw gas prices tick up above $4 a gallon. And I think there's some psychological perhaps impact to that. And we certainly saw among our customers and members that they were more choiceful during that period of time, that they're seemingly making trade-offs because their wallets are stretched. It's why it's so important for us, though, to lean into low prices. And we said we've reinvested a lot of these tariff refunds into lower prices. Right now, we have 11,000 rollbacks for our customers. And so we want to be there for value for them and also convenience. Importantly, though, Carl, we're gaining market share. Our market share gains in food in the most recent period were some of the strongest that they've been in a long time.
John David, it's David.
All right, so you're not getting too much from the Walmart CFO around consumer weakness. He's acknowledging it, but he's not making it the biggest deal. SpaceX still down 4%. Micron, complete rebound from 930 to 950. That looks like a legit V shape right there. As that goes green, up 2%. But it looks like some of the GLP pricing is definitely having an impact on their pharmacy business, which also probably contributed to some of the pain that we are seeing right now. SoFi, does that go red? That does go red. Interesting. Some of the other fintechs are holding up. SoFi red. 1811 right here. Navitas. I know this is getting a little bit more hype on social. This has kind of been flat. I think Jose owned this a while ago. I don't know if he still owns it, but it got up to 27 a while ago and then took a bit of a dump. SanDisk as well, that continues to kind of stay up, even though that lost 1,600, 1576. Rocket Lab, I wonder how low this one can actually go today. Hit 72.97, kind of stuttering above 73. Let's see if it actually loses the low 70s. And if it does, then, the 60s are up next, which I don't think it would get there. But if it does, then it is what it is. Thoughts on Nubank? They had a great quarter. It's an international name, which has kind of hurt it this year. It's also a $70 billion market cap, so it's not the easiest to move. But they also have about 5 billion shares outstanding. So it's not super volatile, but they had a good quarter. I mean, I think long-term as a compounder, holding this name over the next 10 years, assuming the growth of Latin America is not something to be super afraid about, especially because they just don't have as much competition in the region. Do you think Netflix is bottom? Yeah, I think that's 67 range. I mean, they would have to mess up badly on the next earnings for this thing to actually go back into the 60s. I don't know if it's going to be that bad. You had Brian Armstrong, who was live a few minutes ago. Let's hear from him as he continues to make the case for why crypto might be back.
Business. and it's good for the crypto companies. And most importantly, it's good for the 50 million or so Americans who own crypto. And so that's the big opportunity we have now to cement all of these changes that everyone's worked on in this administration and make sure it's durable for many decades into the future.
If you were to handicap it at this point, you say it's a winning vote at this point?
I'm pretty optimistic it'll get over 60 votes. And I think both sides got 90% or so of what they want, which, in any deal I've been a part of, that you say yes to that deal. Like any good negotiation, there's a few last minute things people would want something a little bit more or less. But now it's really good that we have a deadline, September 15th. And I've got to give credit to Leader Thune, who scheduled that. There's a lot of competition for that floor time. There's a lot of competing interests. He would not have scheduled this on September 15th if he didn't think it would pass.
One of the other big issues, and I know you've been spending time and meeting with the SEC, as have been others, about the idea of tokenization and really the idea of what kind of exemptions the SEC could potentially put in place to encourage innovation, really in the absence of Congress passing any laws.
Yeah, well, you've got to give a lot of credit to Chair Atkins at the SEC and Chair Selig at the CFTC. They have made it very clear that they're going to continue to publish clear guidance and rules under their existing authority, regardless of what happens with the Clarity Act. So I think they're ready to move forward on that. They've actually, even just this week, the SEC put out new rules clarifying for the first time how crypto projects can go raise money that in the markets that are securities. That's something that we've been wanting for many years. I think the SEC is working on now an innovation exemption about how crypto securities could be traded in the U.S., which tokenized equities. Coinbase has been working hard on this, but we've so far only been able to do it offshore outside the U.S. In fact, we're launching our tokenized equities product next week out of Abu Dhabi for non-U.S. But in the U.S., we should be moving in this direction too. Same thing with single stock equity perps. So there's lots of work that these regulators are doing, and they're going to create clarity regardless of what happens with the Clarity Act itself.
So Bitcoin bounced yesterday. Your stock also bounced yesterday. I'm curious how much you think that was a bounce off of the back, effectively, of the meeting that you had, or it was really off of the bounce. I don't know if it's a bounce, but really in reaction to what Scott Bessent did yesterday.
Yeah, well, I think those are both good theories. I'd like to think that people are reading the tea leaves a little bit on a few things regarding the Bitcoin price. One is that we've been in a bear market on spot crypto trading for the last year or so. And if you look at the prior bear markets, they each lasted about, 370, 380 days. We're basically coming right up against that, where people, they're going to say, well, this one's about over and it's time for the next bull run in crypto. They're also looking at this September 15th vote for the Clarity Act. And then traditionally, following the Bitcoin halving cycles like October, November, December, these tend to be good months for Bitcoin. So I think there's a good chance we're on the cusp of the next bull market for spot trading in crypto. But what's important is that in this bear market, Coinbase has really diversified its revenue. We're actually only about 12% of our revenue now comes from Bitcoin spot trading. The other things that have been growing in this down market for spot trading are things like crypto derivatives, prediction markets, stablecoin payments, tokenization of real world assets like these stocks that I mentioned. And the big one that's on the horizon is what we call agentic finance, or AI-fi. That one is just getting started, but I think has potentially the biggest TAM, because there's going to be more AI agents than humans in not too distant future. And they're all going to have to, have an economy to get work done on our behalf.
I've got a maybe hard political question for you. This president has been very helpful to the crypto industry, and yet there have been all sorts of questions about the role of this president and the president's family as it relates to crypto. There was an op-ed in the New York Times recently that suggested that much of the conduct may be very well unconstitutional and illegal. And I'm curious whether you think that represents a cloud over the industry, whether you would prefer, all things being equal, that the family not be involved in crypto, or maybe you do.
Yeah, so this is a complex subject that I know lots of people in the Senate are debating. And, one thing I would say is that the president and the White House have put an ethics offer on the table that could go into the Clarity Act. It requires, I think, moving his funds into a blind trust, or there's different variations of it that are being negotiated back and forth. But that's pretty unprecedented. I don't think there's any actually bill prior to this where the president has voluntarily offered something like that to go into the bill. So there's a real offer on the table. There's some things I know the Democrats would like that's even a little stronger. My understanding is that they're going to keep talking and work out some kind of a deal there. But I think the most important thing to recognize is that, yes, the ethics question is big. I'll defer to Congress and the White House and the president on how to solve that. But there's a lot of good stuff in this bill about consumer protection and how to reshore all this back into America. And so I think everyone kind of realizes the ethics part would be nice to have perfect in everyone's book, but the 90% of it, we should not like leave the status quo and leave Americans unprotected as a morass of state legislation to operate in the U.S. That's just going to ensure this all goes offshore.
I mean, it's a fair point. If we do not have real legislation, it will all go offshore. And then any level of crypto innovation, Lumentum getting a 3% move right here is not going to be as effective. The problem is Trump is, trading a lot of this crypto stuff. We obviously had that meme coin a while ago. And so you've got a lot of people that aren't happy that Trump is engaged in crypto so intimately by literally launching a meme coin. And that kind of taints the overall image of crypto. But then you have other people saying, okay, like, sure, we don't like that either, but like, that doesn't mean crypto itself should be dismissed and that we shouldn't have any meaningful, digital assets legislation. And so it is a bit of a tough spot for some of the CEOs, but again, it does feel like there is more momentum on the side of getting legislation passed. 71,500 on Bitcoin, basically been flat for the majority of the morning. XRP, that's getting a little bit of a move. You're starting to see a lot of these other coins that have been kind of flat for a while start to get some excitement. Palantir 174, Salesforce down a little bit. Zeta, that is also down 2%. I do not know why SoFi is getting hit here. 3% feels a little aggressive, especially with Bitcoin trading where it's at. So I'm not sure. But that one is red. Is Hood still 95? Hood also goes red. Okay, so maybe all the fintechs are getting hit. Hood losing 95 right there. As it was 100 in the pre-market. The blind trust is called Barron. Dude, we haven't heard from Barron. Has he ever done an interview? I don't think I've ever heard that guy talk. I wonder what his life is like, bro. Like, your dad is the president and you have access to all of this different information and probably an unlimited budget to trade with. I mean, it must be freaking crazy. I think he goes to NYU. So, he is in that business world as well. Lumentum, that's up 3.7%. He was like me in school. I never talked. Put in the chat if you talked in school. If you were like social. If you were like the class clown or something. I feel like there's so many people that just like got through school and just went through the motions and never really like interacted that much with people. I don't think I was like that until my senior year. I was pretty social, but my senior year I locked in on trying to become like the best debater in the world. And like, I locked in so hard my senior year, I did not take a single picture with a friend on graduation. Like, I don't have any pictures with friends from graduation, which is kind of sad, right? It's kind of like, great, like, how do you not take pictures on a graduation? But like, legitimately, I had not that I didn't have any friends. It's just, I didn't have any real relationships that I maintained my senior year because I was so obsessed. It was like every weekend I was traveling. I wasn't going to any of the school events, any of the parties, anything. But freshman, sophomore year, I like really, embrace that. It's just, there's not much excitement towards it. Like, building something and trying to compete in something and being ambitious was way more interesting than like going to the parties. And so I kind of gave that up a lot my senior year. But in college, I had a lot more fun because I stopped debating in college. And so cared a lot more about having a social life then. Yeah, most of you saying no. It's like 60-40 no versus yes. All my friends got expelled. Bro, what school did you go to? All my friends got expelled. Why didn't you take pictures with the debate club? I have friends with I have pictures with my debate friends for sure. But my senior year, I was the top debater. Like, everyone else were like freshmen and sophomores. My junior year, there were 3 seniors that I was really close with. And we were like, all 4 of us were really good friends. But then they graduated. So it was kind of by myself my senior year. But yeah, it's just like, like when you kind of get so deep into something and you're excited about it, there has to be some sacrifice. I've also noticed that in life, dude. If you're going to do something, there has to be some sacrifice, whether it's social life or this or that. Like, you don't get to where you want to be without sacrificing something. And you kind of just have to accept the inevitability of that. CoreWeave 9127. So CoreWeave, again, they got a deal with Hudson Trading, multi-billion-dollar, multi-year AI cloud deal. Not exactly like the Jane Street deal, but kind of similar. HRT will use CoreWeave for trading research and model development and will be among the first customers with broad access to NVIDIA's upcoming Vera Rubin chips, which is very nice to see. The deal expands CoreWeave's push into financial services and further diversifies revenue beyond its biggest AI customers. Guys, the master debater jokes are old. It's like, I've heard them too many. If you're going to be original with your jokes, we need some new jokes. I've heard that joke from regular people in my life outside of the chat for like the past 10 years I've been involved in debate. You need better jokes. Who played sports in high school? You guys know me. I was starting JV freshman point guard. I ended up giving up my sports dream just because I realized like I didn't want to make people feel bad. And I was, I wanted to let people do what they wanted to do on the basketball court. And, I kind of thought it was just too good that it would be better for me to not embarrass everybody else. So then I just chose something more challenging like debate. But put in the chat if you were like a quarterback or you played soccer or something. We're seeing Bitcoin try to get a little bit more of a run right here at 71.4. BMNR is up 5. ETH's at 22.73. We got a Waymo headline. Google just announced that Waymo has built a custom application chip or ASIC to build and improve vehicle performance. Google not getting any love from that, but it looks like Waymo has a brand new chip. Waymo reveals robotaxi computer architecture and hardware suppliers. Waymo detailed the trunk-mounted computers powering its driverless fleet, including a custom 5-nanometer ASIC and suppliers supporting its real-time autonomous driving system. AMD, Micron, NVIDIA, Samsung, SanDisk, and TSMC were the hardware suppliers for this chip. More demand for compute. If Waymo ends up 100xing their self-driving, the entire semiconductor stack is going to need, a lot more compute. Amit was a cheerleader. I was not a cheerleader. I actually dated a cheerleader. None of you guys will believe that. None of you guys. Oh, wait, I told you guys this story before. None of you guys are going to believe I dated a cheerleader. None of you guys. Freshman year, dude. Freshman year. Brand new into high school. JV basketball team, starting point guard. Cheerleaders saw me at practice. It is what it is. It happened. I don't know what to tell you guys. No, it was not a male cheerleader, dude. I hate you guys. I really wish I could. I haven't talked to this girl in like 15 years. I really wish I could contact her and she could prove that I was right about this. So you guys can believe me. Bunch of you guys played football. Bunch of people saying soccer. A couple people saying golf. I didn't know high schools offer golf. We got our boy Gene in the chat. I know he played soccer. See a few basketballs. Football is the main one I think a lot of people played. Lumentum, that's up 3. Bitcoin now starting to fall off a little bit, 71.7 to 71.3. This thing is to hold right here. Going below 70 was not going to be fun. Rocket Lab kind of stuck at 73.60, and then Micron at 9.55. Tennis, dude. Volleyball is a big one. You guys are mentioning. Our volleyball team in high school was actually really good. The girls' volleyball team was really good. The guys' volleyball team was kind of not the best, but the girls were actually really good at volleyball. Mainly basketball. Yeah, I think a lot of people also at least tried basketball. Yeah, I mean, ultimately I quit because I just wasn't tall enough. That was the real reason. But, if I was 6'2", there might have been a shot. Wow, Egypt's central bank leaves their benchmark rate at 19%. Goodness gracious, bro. You got Fed members trying to raise up to 4.5%. Egypt's at 19% for their benchmark interest rates. This is why people still buy our debt over Egyptian debt. Like, you want to buy Egyptian debt and do what, 19% interest rates, or you can buy U.S. treasuries. Like, it's still better than the rest of the world, even though our national debt is kind of ridiculous. The U.S. is floating a sale of 4.5 billion of arms to Qatar. Is this true? 4.5 billion sale of aircraft-related equipment. The State Department has just approved to Qatar. Okay, it doesn't look like that's like heavy military equipment. It looks like that's just more aircrafts and refueling instruments, not necessarily an arms deal in and of itself. Where is ARM today? ARM is down 1.5%. As that continues to go red. Could you dunk, dude? I'm 5'7". There was no world in which I was dunking. But I worked hard. I worked really hard. And I had some decent skill at basketball. I just did, at some point you have to have the height to really compete. I just did not have that. How did you improve your articulation skills? Any suggestions on an academy you could share for someone who struggles with articulation? I think when it comes to public speaking and communication, a lot of it is rooted in just wanting to learn about specific topics you care about and then trying to have as many conversations as you can about those topics. So when I did debate, like I would literally be forced to debate new and interesting topics. So I'd have to research, then I would have to be confident enough to talk about that research in front of an audience. And that created a framework to be able to learn how to articulate. I think it's the same thing for anyone else, right? If you're like super interested in the stock market, even if you're just talking to yourself about things that are happening throughout the day, being able to speak out loud and like recap what happened in the day every single day, it like builds the ability to learn how to articulate. And then obviously if you can do it in public, if you can speak with more friends, I know it's obviously scary for a lot of people, but that's the thing about it, dude. Public speaking has never been scary for me, like ever. There was one moment where I was scared of being in front of an audience. I was at a talent show. I think I was like, this is 2005. Yeah, I was 8 years old, and I had to like, I was like big into rapping back then. And so my mom entered me into this like community talent show, and I had to rap the Danny Phantom theme song. It was a cartoon on Nickelodeon. And like I got the mic, I went in front of the audience, and I just dropped the mic and I left because I either forgot the words or I was just so nervous seeing all those people. And then I just started crying. And at that moment, my mom just like consoled me, and she was like, it's okay. Like the fact that you even went up there is what matters. And ever since that day, I don't think I've ever been afraid of like speaking in public. It was like something happened that day. And then since then, I just like, it was kind of natural to be in public. It was kind of like a jolt that happened that day of like having that one embarrassing experience. And then like 5 years later, I joined debate, 7th grade, and just started talking in public and not caring. So yes, it was Danny Phantom. It was a rap. Basically, that whole theme song was a rap. Mic round right there, up 2%. But it's kind of crazy now, right? Because now, like, for a living, I talk in front of people every day. And, dude, I'm really never nervous, ever. Like, I'm just never, like, I'm excited to do this, not nervous. And that's the big thing with articulation and public speaking. Like, you're either excited to embrace an audience or you're scared. And if you're excited, like nothing's going to hold you back. If you're scared, you could be the biggest expert in the world. You're just going to constantly be thinking about too many things, and it's going to give you anxiety. So I think getting over that fear is also the biggest thing. This is why the abuse in the chat doesn't affect me. It fuels me. It fuels me to be more articulate, even though, ironically, I can't say many words every single day. You're nervous with carp? Okay, with carp, look, with someone else, yeah, I definitely get nervous. But like, if I have to, do what I do every day, like, I've been doing it for 4 years. Like, I'm excited to do this. I'm like, when there's a big news day, like there's so much to break down. I get a high of being able to break things down in hopefully an interesting and exciting way that has all the details and perspectives that are needed for people to understand what's happening. But yeah, when you're with carp or some of these people, there's obviously some butterflies and you get more nervous. Meta right there, 545, as that continues to go down. His advice is just speak so fast that people's brains can't keep up with what you're saying. Sometimes that also helps. Jose is not joining us today. He is busy. He texted me this morning. He's at a doctor's appointment at 10 a.m. But he was on last night. Yesterday's show with Jose, Neil, and Tanner was something else because Tanner dressed up as like a, I don't even know what to call it, but he wore like his pajamas because everyone is focused on his sleep score. And he committed to the bit. He absolutely committed to the bit. But yeah, well, I was going to talk with Jose about semiconductor equipment companies today. So KLAC, AMAT, Ella, Lam Research, etc. But he ended up getting a doctor's appointment. So next week he'll be on and we'll talk to him about that. Yes, we still need a name for that podcast. We still need a name for it. Mid is nervous around girls. You know, to be honest, I'm not that nervous around girls. Like, I don't, because when you're on a date or something, it's like public speaking. It's like in that moment, there's an exchange you're having with that person, and your ability to communicate is what really is what matters, right? So I've never been that nervous. And maybe in like middle school, I was a bit nervous. But by the time I got to high school, I was like not nervous at all. And I'm not really nervous to this day. Now, you put me in front of Carp, I start stuttering and get nervous and all that stuff because that's like Carp would make me more nervous than any girl ever could. Any girl. Like, it is what it is. Like that question I had to ask Jensen, bro, my heart was beating that first. Like, that's why that question ended up being so freaking, like, it was like a 4-minute question. Like, it should have been like a 40-second question. Like, I just like, I lost my train of thought and I kept talking and all this stuff. Now, Jensen did interrupt me. And so that kind of messed me up. But then again, it's Jensen. He's allowed to interrupt anybody, right? But I was way more nervous than that than like I would be on like a first date. Corning, that one getting a low recovery at 152. Okay, so the consumer stocks are still kind of struggling. Lowe's had a decent earnings yesterday. That stock's still down 1. Obviously, Walmart still not really recovering, down 9.3. This is the worst day Walmart's had since 2022. And then Micron trying to get just the break up back above 954. Your leg shook more on basis points interviews with women. Yeah, that wide camera angle, you guys got to see me shake my leg. My leg is shaking right now. It's just how my leg is. Sandis trying to push back above 1630. We got Besant in 20 minutes. That's going to be really important. We're going to have to see what Besant says. Hopefully we can get some actual analysis here on these yields. We're right back to 4.7 as that's not changing at all. Is that where you were swinging during the... No, the reason I was swinging during the Carp interview is because he was swinging. So like he was swinging, so I was swinging, and then he ended up swinging, and I kept swinging to the other side, and so we just ended up swinging together. It was more so like, it was so informal, because again, he just saw me there, and he was like, let's do an interview, and I was like, okay. And then so we just ended up doing it, right? But it wasn't something that was planned, so it was kind of just more like two guys hanging out and talking. Still nervous, but that's why I think we were swinging. Rock Lab, 73.76. It's down 2.7. Would you buy Walmart? No. I mean, what's the excitement to buy Walmart? Could it get a rebound here? Sure. But like, it's Walmart, right? Like, I mean, I'd buy Meta over Walmart here. Like, I haven't bought Meta yet this week because I'm like, okay, this stupid trial is probably going to take some time and maybe we get better prices. But I mean, Walmart's still more expensive than Meta. Walmart trades at 37 times. Meta trades at 17. Walmart's growing 5%. Meta's growing 33. I mean, like, yeah, you could say it's a hedge against tech or whatever, but I feel like if the market goes down, Walmart's not really going to massively outperform, especially if the consumer continues to be weaker than expected, even if the consumer is not explicitly weak. It's because you're bag holding Meta. That's probably true as well. But no, but seriously, guys, like, really, Walmart over Meta? Like, I get Meta's having some issues right now, but the multiple you're paying for Walmart's growth is a little egregious compared to the fact that there is no growth. Like 5% revenue growth is what are we talking about? And unless they bring, some margins down to the bottom line, which they're not really doing, like it's not that profitable either. So I don't know. It reminds me of Nike. Nike still trades at a kind of ridiculous multiple, even though it's down 70%. This Waymo news is interesting. I mean, it's obviously creating more demand for a lot of these other sectors, but I wonder if this Waymo chip actually is more productive. Here's what Waymo just put out about this. If this actually is leading to more, improvements around self-driving, which again, I still think Tesla's way ahead of everyone else, then obviously can lead to more demand in general, which again, more demand for self-driving, more demand for compute. Like that should be a virtuous cycle that keeps the broader demand stack increasing. Also, Micron today announced that they're investing $10 billion over the next decade to build Micron Research Labs, headquartered in Idaho. The CEO was live this morning. He'll be on later today as well. The lab will focus on advanced memory, compute architectures, chip packaging, and future semiconductor manufacturing. On top of that, you had OpenAI yesterday basically claiming that 2027, they are probably going public.
Yeah, so from what I'm hearing, OpenAI's CFO, Sarah Fryer, told employees yesterday that the AI giant will be a public company in 2027 or sooner. Have some more details on that. This was at a company all-hands meeting yesterday out here in San Francisco. I did speak to two sources that were in the room and who attended that meeting with Fryer. She did first acknowledge Anthropic, their biggest rival out there, said there is a chance that their competitor goes public in September. Fryer telling employees that's okay. She said, we are running our own race. The IPO is not a finish line. She said it is a milestone, called it another fundraise, and then pointed back to the record fundraise, $122 billion back in March from OpenAI. She said that gives them flexibility. We will be a public company, as I mentioned, in 2027. Her words, we may go sooner, she said, if the business continues to inflect. But either way, she said, we are going to do this on our own timeline. She also shared some new quarter-to-date revenue numbers with employees. So revenue run rate now up 35% quarter-to-date. Enterprise revenue in particular up 50%. And then also Codex, that is sort of the coding side of the business in enterprise, 20 million users, up 3.5x. It does coincide with OpenAI's latest model launch that we saw this summer as well. Fryer did not explicitly mention this Wall Street Journal report that we heard earlier in the day yesterday, but the Journal did have some Q2 numbers that showed a bit of a wider loss, or I should say much deeper losses in the quarter, and then some slowing revenue growth, at least compared to Anthropic. So she didn't say that she was responding to that, but that is the backdrop of all of these numbers, guys.
And in many ways, Kate, I thought the most significant, one of the most significant parts was sharing that revenue inflection. It's like the fourth time we've used the word inflection today, or I have. But it's on the brain literally because of these two companies, because Anthropic inflected, now Open. Basically, they're trying to say, no, don't worry about that measly $1 billion in revenue that we grew from Q1 to Q2. Now they say they're growing 35% quarter to date. That's better. 50% on enterprise. Yeah. Is it good enough to move up the IPO timeline to make people feel better about that?
Someone just bought 1.2 million of calls on MicroStrategy, 150 strike November 20th. You're seeing a lot more option premium come into some of these crypto names now.
One of the things that I'm hearing, Kelly, is, I mean, these companies do compete. The fact that Anthropic is going out this fall does not leave a lot of room for OpenAI. So strategically, Sarah Fryer, who used to be a banker, she was a public company CFO. She probably knows this better than anybody, but you don't want to follow your biggest competitor directly. So they need to have a little bit of oxygen between those two listings, just by the pure fact that Anthropic is on track, as Sarah Fryer mentioned, to go as soon as September. I think that's earlier even than somewhat people that I have talked to say maybe early October. So not a lot of room for Anthropic to get, or excuse me, OpenAI to get out next. And then there's the numbers. I mean, the losses are deep. Private market investors that you talk to, anybody that's spent time with this company knows it's not profitable and they're willing to fund growth. There's a question about how public markets digest that.
Dude, I don't want to own Anthropic and OpenAI, but I think the Anthropic IPO is still going to be a buy. I think that thing is going to pump so hard. The OpenAI one, I think, will also pump, but the Anthropic one, I think the public will basically be told a story that Anthropic's leading frontier models are so far and beyond the competition. And I think they are waiting to deliver those details in the S1, not only exemplified through the numbers, but also through, Dario's communication around how unbelievably special their models have become and how many enterprises are essentially hooked onto those models to the point where even if you tried to go to open source models, I was actually listening to a podcast yesterday about someone who was saying The open source models are also pretty expensive. It's not like they're the cheapest for the most complex tasks that are out there. So then the question is, okay, if you have a basic task, like sure, you can use the open source models, but if you have something really complex like coding, the open source ones, they might be cheaper than Anthropic, but is it cheap enough to completely take out Anthropic from your enterprise and like put in your own host of models and train it yourself and fine tune it? It's like for some people, maybe, but for other companies, they're not going to want to do that. And that's just is going to be where Anthropic gets a lot of that revenue growth from. And I don't know. I think that is going to be the story that people try to sell to the public. The question is, how long will that story be able to continue? Because once again, the sustainability of that token growth, I think, is the broader concern. SpaceX right there, 133. Is that still down 4%? And then if OpenAI comes out and says, look, Anthropic told you that they were ahead of us, but they're really not. Here's our latest models. Sam Altman said they're getting ready to release the next one in the next few weeks. And here's how cheap it is compared to Anthropic. Like it's the problem with commodities fighting with each other. And that is my hesitation on owning the name. But from a perspective of buying it on the IPO day, man, I think it's going to just rally. Like I'd be surprised if it's down like 10% on the IPO. Even SpaceX, in a few weeks of just crazy price action. Should I pay for Claude or ChatGPT? Honestly, I use ChatGPT more, but I used Fable 5 last week on just like asking it questions, and it was freaking good, man. I think it was even better than GPT, but I still use GPT every day because it's just like it's a thing that I've, once you start talking with something every day, all your memory is there. So like when you wanted to recall something, you can't just easily go to a different LLM if you've been using this one every day. So GPT is still the one that I use consistently. But Fable 5 is really good. Like really freaking good. Where's Doge? Yeah, that's a good question. Doge should be up this week, right? Doge is at 7 cents. It was at... Oh, it hasn't really moved that much. I mean, the lowest it got to was 6 cents back in early August. Yeah, it's kind of been stuck at 6. It hasn't even gone below 4 or 5 cents. So it hasn't really made a massive move here compared to Ether, Bitcoin. You can transfer your data over. That's fair. It's just, again, right? Like as a consumer, do I really feel like doing that? Or do I just use the same thing I'm using every day? And I think the majority of people will just... Yeah, you guys say it's easy to transfer memories between LMs, but think about the majority of people. Like we're the only group of people that are actually testing multiple LMs. Most people do not care. They will download one thing and they will use that one thing. And that one thing, quite frankly, is ChatGPT over Claude. So I don't think most people are going to go through the process of even like, it's like, are you going to really take your Spotify playlist into YouTube Music? It's like, no, you're stuck on Spotify. You're going to be using it on Spotify. And it's unlikely to convert that easily. Rob, thanks for the super chat. You just described the moat of the model companies. No one is discussing context and the friction of switching. Yeah, but is that really a moat? I think is the bigger question. Because, look, yes, it's hard for consumers to switch, but does that mean that the companies will be able to monetize those consumers enough to be able to justify the valuations, right? And if the only moat is people won't leave, I don't know if that's the biggest moat that's out there, especially because enterprises will leave if they can get a substantially cheaper version of the product. Consumers are already not paying for it, so there's no point for them to leave, right? Because they're not spending that much money. If they're actually, spending $200 a month or $20, $50 a month, then maybe they're going to take it seriously. Enterprises will switch pretty quickly if they can save more. So that's where the moat becomes degraded to me, because the context is interchangeable. And then if you have a cheaper price, I mean, a CFO is not going to pay for no reason, unless the model is just that much better, right? Which goes back to the question of like, is the frontier nature of the models the moat, or is it the stickiness of it? And the stickiness of it might not be a moat for the customers that matter, which are enterprises. For consumers, it might be, but consumers, you're not making that much money off them anyway. This is why Ben Thompson, he made a good point yesterday. He said ChatGPT should have entered the advertising business way sooner than they did, right? Like it would have made so much sense in 2023. I mean, honestly, Google and Meta would have been sweating if Sam Altman actually came out with a meaningful advertising product in 23 after ChatGPT exploded, because they were learning so much data about consumers, and they probably didn't want to do ads because they didn't want to make it annoying. But I mean, they could have easily started building an early prototype of what ads looked like. They like just started it late last year. And if they did, I would imagine that there was a massive opportunity for them to steal advertisers away from the other companies, just because there's a new way, and advertisers are always looking for new ways to reach consumers. And they didn't go for it. And now they're pivoting to the enterprise because, you know, they're realizing it's not as effective. This is what Ben Thompson said yesterday on this topic.
Enough. If you're going to be in the consumer market, you have to be doing advertising. And now they're doing advertising now. It's a little weird. They finally pivoted to doing advertising. At the same time, they're like, oh crap, we need to go for the enterprise because Anthropic is kicking our in. So I'm not quite sure what they're doing there. They have been rolling out ad features very rapidly, like things like Cappy and the connections with retailers, so you know if a purchase went through, so you can do all the tracking and things like that. So I'm very interested to see how that goes. There's a bit where, had they leaned into advertising immediately as soon as ChatGPT was a hit, I think they would have a killer ad product right now. I think that Google would be in much bigger trouble. I think Meta would be in much bigger trouble, because if you have this flywheel, the thing about advertising with consumers is your ability to monetize the consumer
goes up
is
as the volume
infinite.
goes up, yeah.
Because the advertiser is bearing the price increase. So there's zero elasticity issues. If you're charging consumers a price, if you want to raise the price, like Netflix, this is their problem with the subscription plan. They have to be, how much can they raise prices before consumers rebel and drop a tier or give up the service entirely, right? Charging people money is hard. Giving people things for free is easy. And it's very frustrating that OpenAI did not pursue this sooner.
I know you've been spending time with, you know, some of the big.
I think it makes sense, dude. I mean, people don't want to pay for these LLMs. Like, put in the chat if you pay for them. I mean, like, I pay for Claude and OpenAI, but like, the majority of the world is not trying to, like, people don't want to pay for this stuff. Especially if you're not doing that many intensive tasks. Like $20 a month is a lot of money. $20 a month is like Netflix, Spotify, those are cheaper than YouTube Premium's cheaper than that. So I feel like you really got to give a crap about tech to actually, you know, pay that much. Uber 78, Ethereum 2,200. Hala says I pay $50 a month. All right, put the amount you pay. I think is a better question. If you actually, I pay for Grok too because I pay for Twitter Premium, so I pay that $50. So I basically pay at least $100 a month. So put in the chat if you add up all of them, how much do you pay? Like, that's crazy, bro. They're getting $100 a month out of me. Like, it's not that easy to get hundreds of dollars a month out of people. Now, granted, I wouldn't cancel it because I think they're pretty useful, but how many billions of people would be willing to actually pay that? I see a lot of zeros, bro. I see a lot of people like, I ain't paying this shit. I wonder if Ed Zitron pays for it. I feel like ethically he can't pay for it, right? Like, he's helping them if he pays for it. I see 20s. I see some people 400, 500. Percent's going to be on in 5 minutes. Yeah, Steve pays. Steve pays a lot of money. But Steve is like legit vibe coding. That's why he pays so much. You know, I'm not vibe coding every day. I'm just like asking basic questions. But like, look, when I need to like really consult with an LLM, like I'm having an issue and I really need advice, my goodness, they are. I mean, Fable 5 and 5.6 are just unbelievable. Like when you're like really stressed out about something, like I need you to understand all the context and really look at it from different perspectives. It's something I would pay a lot more money for, to have that sense of clarity and closure and like perspectives that I can trust. But it's also like, how many times do you need to engage in those situations? It's like maybe a couple times a year, and not every day, I would think. So is it worth just that much, right? See, 200 for Codex, for Claude Code. Yeah, it's cheaper than a therapist, dude. Dude, a therapist charges like $150 an hour or something. And you're doing most of the talking. They're just listening most of the time. Steve pays enough for all of us. That is fair. That is fair. He needs a token maxing intervention. Yeah, so most people are around that $20 range. Maybe it averages up to like 30, 40 based on some of the big people. But outside of that, we're paying the basic amount for it. Have you named your LLM? I have not. If you have, you can put their name in the chat. It's a she for me. But I have not named it. Gemini's the best therapist. Dude, Gemini's the one I don't use. I really think Gemini is horrible, guys. Every time I use this thing, it's like not good. Like, it's just like, I don't feel like I'm getting real value out of it. I know the people that are super into Google, maybe it's just integrated in your life, but Gemini is not, like, it's not the thing I'm going to ask when I have a really complex question and like I want to go back and forth on a conversation. But the point is, who cares? That's just, my perspective. The other people that use Gemini, right? Like, are they going to pay for Gemini is the question. Like, even if, Gemini has 1 billion monthly users now, how many of those billion are actually paying for it? That's why this consumer part of the business is so hard to magnify, which is why the enterprise, I think, is going to be the biggest thing in the S1 for Anthropic. Remember 1 year ago, we agreed Gemini was best for everyday use. I remember that. Gemini used to get a lot of my attention, and slowly it just kind of, but also that story is in the enterprise too, right? Gemini has been failing in the enterprise in a meaningful capacity compared to OpenAI and Anthropic. That's why they had that whole leadership change 2 weeks ago. Now, I don't think Gemini needs to really win in the enterprise. Like, they could just, any model could win. They're going to be the back-end compute infra layer. But I think Google would want Gemini to have a better chance to win the enterprise. Have you used the paid version of Gemini? No. How much is the paid version of Gemini? Is it Gemini Pro? That's like $20 a month, right? Or do you have to pay the $200 a month to get access to all of it? But I've never paid for it. I use Google AI overviews every day though, so that's where Google gets a lot of my queries. Okay, Basent should be on soon. I think he's really going to try to calm down this market and explain why they swapped the short end of yields for the long end, 4.68 on the treasuries. We haven't heard from Basent in so long. I miss Basent. Basent was the guy who called the top of the VIX in May. He said the VIX had peaked after the VIX hit 60. He was right. It's been so long since we've heard him say something good to make us feel better about the market. You can't say it sucks if you haven't used the paid version. Yeah, but no, you shouldn't have to pay for it to not suck. Because ChatGPT and Claude definitely do not suck, even if you don't pay $20 a month for them. It should be a phenomenal product that makes you want to pay for it. And I just never really got that off of Gemini. Parzival says the paid version also sucks. I don't know what it is, bro, but it doesn't feel conversational with Gemini. Like, there's something about GPT and Claude where it feels like she gets you and she wants to help you and she's on your side, and she'll call you out if you're doing something wrong. But like, I don't get that back and forth with Gemini. ServiceNow trying to go for 130. This one's having a really nice day, really nice week, to be honest, as it's breaking out. Zeta is down 1.85. Microsoft still flat. I don't use Grok. No, I don't use it. I use Grok for some things here and there, but it's good at some search stuff, but I don't really go back and forth with it as much. Then again, I should probably try to go back and forth with it more and see what that feels like. I'm not buying Bloom and Intel on the day. These need to give us a bigger discount. Like, they're both down $10 from where I bought them. Like, they need to actually, Bloom needs to get into the 190s. Intel needs to get into the 80s. And I think that would be like a bigger dip to be excited about. Silver is still up. Gold is flipping green, 4,500 on gold. UBS came out with a $5,400 gold target yesterday. So they are getting more bullish on gold. Silver right there, 68.34. As that continues to go green. I pay my wife. She knows everything, so I don't need AI. That's potentially a good framework instead of using AI. A good replacement for AI. Okay, Basent, here we go. Here we go. Let's see what Mr. Basent has to say and if these bond yields believe in what he has to say.
Secretary Bessent, welcome back. It's good to see you.
Sarah, good morning. Good to see you.
So talk us through what you were trying to do here by announcing the increased size of the buybacks.
Yeah, we're trying to signal that we think that this is a thinly traded area of the market, that we're in August, and there's been a lot of corporate issuance that's influenced the market. And we believe that there are many underlying factors that the market is not looking at. And we are going to make a market in these. We routinely do buybacks, and we're going to increase the size of the buyback. And Sarah, I would note that it could be more than the $4 billion per issue.
Yeah, I was going to ask how big this could get. If the signal here is that you're not happy with the direction of yields, they've gone back the other way. We've erased most of the Treasury rally that you got yesterday with that big surprise. So how much more are you willing to do?
Well, again, we have a big toolkit, so we'll see. And part of it is signaling here and to show that we believe that the yields don't reflect the underlying fundamentals. This Iran conflict, we will get on the other side of this. We don't know when, and we can talk about the economic measures we're going to be taking against Iran in a minute.
Sure.
We believe that the liquidity, especially in the 30-year point, is very poor. And we are, in the administration, we are announcing probably at the end of this week, beginning of next week, an increased focus on fiscal consolidation. And it's coming from President Trump. Russ Vought and myself will be examining both on the revenue side and the cost side what we can do.
Yeah, because that's where I was going to go and where a lot of the analysis is focused, as you know, Mr. Secretary, which is, strong signal from the administration on the buybacks, but the fundamentals are ultimately what is going to prevail here in the bond market, and the fundamentals are hard to ignore when it comes to the size of our debt, with public debt increasing to now $40 trillion.
Yeah, I mean, look, Sarah, there's nothing magic about the 40 trillion number. And
I think the reason Bitcoin's up 71.4 to 72.4, wow, is because Besant just said we could increase the buyback beyond 4 billion. I think that in and of itself just meant, look, it's not quantitative easing, but it's like a pseudo form of quantitative easing, and Bitcoin loves that. And so I think that's why it's going up right now.
We can grow our way out of that. So, but what we do want to signal is I think that there's been a lot of misinformation in terms of what's going on with the deficit, what's going on with the deficit to GDP. We actually had a fiscal consolidation for the calendar year 2025. We were at about 5.7% of GDP. And one of the things that's temporary here that's influencing the deficit has been these tariff refunds. And we won't have to do that again. And the Ambassador Greer, through the 301 process, is re-implementing the same level of tariffs. And I would expect that our 2026 tariff income is going to be roughly what it was in 25. And we're going to be able to keep that in terms of the budget consolidation. The other big item in the budget that we're seeing is the hit that we're taking from to revenues for the immediate expensing of factories and of equipment and farm structures. And I think that if people sit back and think that's not government spending, that is actually an investment in the future, and we're increasing the tax base. And that is what measures the wealth of a nation, is the ability to increase after-tax return on capital. So we're pulling back think of it as pulling back the slingshot here. We have a lot of potential energy that will turn into kinetic energy during this year, next year, as these factories come online.
So do you think we've seen peak deficit during this administration?
I think a very, very good chance we have. That we are going to be laser focused, as I said, OMB Director Vought, myself, the President, that combined with the Vice President's Fraud Task Force, where I think we could save several $100 billion.
Yeah. I mean, because the funding needs, I think, are daunting to a lot of folks. The dependence on foreign bondholders, for instance, we saw the intervention in the Japanese yen, and that's erased a lot of the progress there. And so there are kind of all these worries at once about what's going to happen ultimately with these holders of treasuries.
Again, people have bad information. I have asymmetric information. So, I think that the market should think, well, why would we have joined the Japanese in the intervention at this time? Do we know something the market doesn't know? That in terms of being willing to do, what I would call a Treasury twist here, in terms of the bond market, what do I know that the market doesn't know? So, I think the market's probably gotten a little ahead of itself. A lot of people, not much to do in August.
What, does it tie Kevin Warsh's hand? You're nearly in.
Wow. The sense saying people are bored in August, which is why they're dumping bonds. And that's why we're coming into, again, this is more of a liquidity thing. Part of the reason there's liquidity low is because there's not a lot of buyers, which maybe is because they're not bored, but they're afraid. But the idea that he's saying we have seen peak deficit during this administration, S&P didn't love that 767, or they just don't believe him, as we just went red on the day again.
Stated Fed chairman who signaled.
Why would it do that?
Well, just if he does need to raise interest rates because inflation is above target, or trim the balance sheet, as he said, that would work against what you guys are trying to do here with long-term rates.
I think that the Treasury and the Fed would work together if there was any change in the balance sheet, and we would adjust to any kind of runoff that they're doing.
Got it. And what about on rates? What if they have to raise interest rates? Wouldn't that be problematic?
That has nothing to do with the decision that I announced this week on the buybacks.
Okay, but inflation, you mentioned oil and Iran, and I do wonder how much, it's hard to fight it. Right now we have Brent back to 94, and that's putting pressure on bonds with yields higher, the inflationary outlook because of oil. We thought it was going to be temporary, but now we're, almost 6 months out here into this war.
Well, again, this is headline inflation. What we're seeing in core inflation, both in goods and services, is down, and that's what matters. We're seeing the wage increase, especially in a lot of the hospitality sectors, come down. We are seeing that the bottom 25% of Americans get good wage increases, but that's being contrasted by the top earners. So the wage inflation has come down, and the core inflation is down. We had the biggest decrease in pharma prices, I think, in history since we've been measuring the sequence. So the underlying factors other than energy, and there is no, we aren't seeing anything that says that the second order effects are spilling over into core inflation. As a matter of fact, in the past weeks, we are seeing the 5-year, and any inflation markers is telling us that inflation is going to be lower in the future.
So that raises the question about what happens next in Iran. And you mentioned the president last night said that there's more economic pressure coming on Iran. I know you're heavily involved in this and executing this. What can we expect here?
Yeah, you're going to expect, I'll be holding a press conference on Monday to talk about exactly what we're going to do. And again, we have asymmetric information, and I'm not sure why oil has popped up on this, because this for now, and it is at the president's discretion, if we are doing the maximum economic pressure, then that means that likely there will not be a large-scale kinetic restart. But I would emphasize that is for now. And we do have control of the strait. You would have seen media reports that large amounts of energy are getting out. And I think that we can continue doing that in the southern lane. And that I think oil markets are misinterpreting what this economic pressure means. The economic pressure means that we are going to all of our allies, and this is going to be the greatest coordinated economic isolation in the history of the world. And we are going to them and saying, you are either with us or against us. You want this murderous regime to end. And if you insist on the doing business with them, either transferring money, buying their oil, they're doing seaborne ship transfers, then the U.S. Treasury and the U.S. government, they will put its full might and force toward enforcing against you. So it is time for.
So that's the new plan. That is the new plan. They are not going to attack and use military operations anymore. They are coordinating with all of our U.S. allies to create an economic squeeze, I guess, on Iran to be able to force them to come to the table. It looks like if this is what Basent is saying is the way that we're going to go forward with Iran, it is not about military action anymore, because it probably wasn't working. It is now about just forcing the Iranians to have such a horrible economy by no one wanting to do business with them that they come to the negotiating table. And I don't know if that's going to work, but it looks like that is the new plan for this war.
For our allies and the rest of the world to make a decision, and we are going to squash the economy of this murderous regime, which that will curtail their ability to project power through their proxies. It will mean that they cannot pay the military, and we have substantial inflation, both food inflation and ordinary inflation in Iran. And what we have seen. I see lots of reports that said, oh, well, this has never worked. It does work because we have a combination. It is a 1-2 punch. We have the blockade, and we are going to have the toughest sanctions in history. And I will tell you, this will work. It worked in Venezuela once we put up the blockade. It is working in Cuba right now, and it is going to work in Iran, and we are going to collapse this regime.
Does it include China? Because that's the primary economic partner of Iran.
Again, many conversations are best to have in private, and we are confident that everyone wants the Strait reopened and for energy prices to come back down. And Sarah, keep in mind that the Chinese get 50%, 50, the other energy from the Gulf. So it would do them a big service to get with the program.
I just wanted to get your read on the economy as we see oil prices marching higher again. We have seen tremendous resilience, as you noted, from the consumer, but there are signs that the job market may be cracking a little bit. Got a weak job report last month. I'm curious about your assessment as to how much we can handle all of this.
I think the jobs numbers are quite noisy. And again, Sarah, the other thing that's important too is like the jobs that we're seeing are going to Americans. After the deportations that we've seen during President Trump's administration and the closing of the border, that this unfettered migration, we don't need to produce as many jobs. And what's really important here is we are seeing a manufacturing renaissance, and that is shown. We're seeing construction jobs pick up, and that is morphing into manufacturing jobs. Some of these numbers, the manufacturing construction numbers, are the highest they've been in 15 years, and that is a combination of the president's trade policy, tax policy, and energy policy.
Yeah, I mean, I think also just to follow up on what you were teasing in terms of an announcement with OMB about the debt. I mean, that seems like it could be a very big deal. Is there anything more you can tell us about what OMB's role would be here and the signal that you're trying to send for the markets?
Well, Sarah, what I can tell you is that Director Vogt, who had the same position in the president's first term, knows more about the intricacies of the budget, where we can cut back, where a lot of these programs that are being given to the states and the money's being frittered away, where we can cut. And I think it's going to be a very exciting couple of weeks, a couple of months as we put this together.
The dollar's weakening also. I wanted to ask you about this. We've talked about the dollar together in the past, and it weakened sharply yesterday as well. And I wonder if you see that as a risk here also in making it harder to sort of control the long end of yields. I mean, if that could be inflationary, could be problematic.
No, Sarah, it's not really. The U.S. is a big service economy. We don't respond to the trade weighted dollar. The dollar's been very, very stable. Our largest trading partners are Canada and Mexico. And again, the dollar had a big run. Now it's going back to where it was a couple months ago. But in terms of the inflation expectations, they actually went down.
Got it. So not concerned about that. Finally,
no, again, we continue to have a strong dollar policy, and the strong dollar policy is that that the U.S. economy is pulling away from the rest of the world. When I look, we have 6.5% nominal growth, and the composition of that growth as the headline inflation comes down, and the Atlanta GDP now number is 4% for this quarter. That's a very noisy number, so don't quote me on that. But everything we're seeing in terms of revenue growth at companies up about 12%. So the underlying economy, I think, is very strong, and the only inflationary impulses that we're seeing are coming from the energy, which is temporary.
I'm so glad you mentioned growth, because I know that that's on the top of your agenda. You're hosting G20 finance ministers and central bankers the week after next. I'll be there because I think this is a very big deal. The emphasis on economic growth. I'm curious if you can give us a little teaser about what we can expect and what your agenda is, because it feels different than I was looking at some of the agendas back in 2025. Climate was right up there. Back in 2024, financial inclusion was up there. It feels like it has a different vibe this year.
Well, we do. And I'll tell you that I didn't attend any of the G20 in South Africa because, it did seem kind of a bit off message. And we want to bring the G20 back to its core mission. And that core mission is talking about, what can countries do, economies do? How can we band together to have better global growth? And our message to our allies, our trading partners, is that global growth is the way to take care of this mountain of debt. As the U.S. growth has picked up, over time we will be well above the CBO.
This is why this AI thing has to work. I mean, you're hearing it right now from Dissent, like their plan to deal with this growth. And it's not just their plan. Whatever administration for the next 100 years comes after this Trump administration, they're going to need massive growth, because they're not going to cut spending to pay back this debt. And so it's kind of like CapEx or bust, AI or bust. If we don't get it, like there's just this 40 trillion turns into 100 trillion, and there's no way to get out of this situation.
Trend average, then we are encouraging the rest of the world to do this too. I'm pulling for Europe, but they need to follow the Draghi report. They have they're mired in regulation and kind of intra-European. It's almost the equivalent of this burden that they put on themselves. And we think the rest of the world should kind of unshackle themselves, both on the energy side, on the regulatory side. A huge amount is on the regulatory side. And we want the world to grow. We think the biggest threat to financial stability with this mound of debt that was piled up during the COVID era is a lack of growth. So we are really pushing an American growth agenda for the rest of the world. We want the rest of the world to come along with us. It's going to be in a beautiful spot, Asheville, North Carolina, the Blue Ridge Mountains. Asheville's the comeback city after the terrible Hurricane Helene 2 years ago.
Yeah, I mean, growth solves a lot of problems, Secretary Bess. And finally, the big headline is going to be, of course, on the big bond announcement. So you indicated at the top of the interview that you were willing to go bigger and do more if the market doesn't cooperate. How far are you willing to go?
Well, again, it's not if the market cooperates. It's, we'll see what the conditions are, and we will analyze them then. But I am confident that once the market sees through and looks at the fundamentals, all we're trying to do is get people to focus on the fundamentals and not trade the headlines during a quiet period in a thin market. So we are trying to keep the market in equilibrium, and we are also seeing big corporate issuance, and a lot of that corporate issuance, I would say, is almost yield agnostic, because
That's your Google, your Meta, all the hyperscaler AI corporate issuance of debt.
The build out for AI, the returns on that, the companies believe they're going to be so high, they don't really care what they're paying. I actually think it's interesting that they're issuing such long-term debt. If I were sitting in the chief financial officer's seat, I would think about issuing more what's called the belly debt, kind of 5-year debt, because look, the
reason Besant is saying this is because he's basically like, dude, if Google's guaranteeing 7% for 100 years, it's going to be really hard for someone to buy a US 30-year that's only guaranteeing you 5% or 5.2%. So right here, he's kind of trying to get the big tech guys to be like, can you guys like lean off the long-term debt? Because that's what we are trying to get people to buy so that these yields can come down. But obviously, it's more advantageous for the tech companies to issue these long-term bonds.
If we're going to see this incredible productivity growth from AI, that will naturally disinflate rates. So the thing that they are building is going to cause disinflation. It is causing a short-term competition for capital, but it is going to, we're going to see real productivity growth. We've been, I think the CBO projections, which are always wrong, are in the ones. Post-World War II has been about 2.1. And I don't see why our productivity growth couldn't be 2.5 or 3%. And that is what will create the economic growth and the disinflation.
Well, Secretary Bessent, we certainly appreciate the opportunity to ask some of these questions that we know that investors are asking and wondering about. So thank you for coming on and clarifying.
Good, Sarah. Thank you. Good to be with you.
Yeah, good to have you as always. That is the Treasury Secretary, Scott Bessent.
Okay, there's a bit to analyze there. The market didn't fully like it. Bitcoin did for a moment. Bitcoin, it touched 72.4. There's that candle right there from 71.4. It was a $1,000 candle. Now it's right back below 72. I'm not sure the S&P is loving what he said right there. Are we at lows of the day? Yeah, lows of the day. Well, very close to lows of the day, 766.05. Okay, so what did Besant say? A couple things. Number one, this is why I still think there is a gigantic bull case over the coming years. You heard it from Besant himself. Growth is the only way we are really getting out of the debt issue that we are stuck in. It's a massive issue. It's not political. Republican, Democrat, all of them have been spending money. They're not willing to cut money. It's not politically friendly to any side of the political part of the bracket to say you're going to take away spending, whether it's from defense or whether it's from welfare. So from that perspective, you need to outgrow the debt. Besant is right. We printed $10 trillion during COVID with zero growth, right? Because the world was shut down. And so that created a lot of inflation, and we're trying to get that out of the system. The problem is it's now an ultimatum. Like, if we do not grow, if this AI story does not take off, if NVIDIA does not become a $20 trillion company, I'm not sure that there's going to be any level of meaningful confidence in U.S. debt. Now, again, I'm being a bit hyperbolic here, because if you're not going to buy U.S. debt, whose debt are you actually going to buy? Rocket Lab's still down 4%. Obviously, the U.S. still has the best debt in the world. But if it comes to the point where the U.S. does not really have any meaningful GDP growth because the AI story is not working out, and then the inflation concerns are not really getting that much better, why would you actually buy U.S. debt? Like, it starts to, or at least you would request a higher premium on the yield, which is, going to make it harder for the U.S. to finance the entire country, to be able to get those yields to come down and to get buyers to come in for those bonds, which is why Besant is entering in and creating all this liquidity for the 30-year, which is what they announced yesterday. So, I mean, that's the reason to be bullish. Part of the reason to be bullish, it's kind of stupid, but it's like part of the reason to be bullish is because, like, you have no other choice. It's either, if you're not bullish, everything collapses, which, I mean, no one's going to have fun in, regardless of if you're short the market right now. Like, if the economy crashes, it's not going to be fun for anybody. And if you're bullish, well, then you have to be bullish on this idea that AI is going to work, and the administration is doing every single thing they can do to make sure AI works and make sure that growth comes and make sure there's this massive level of productivity that can withstand the rising bond yield. So that was the first thing. The second thing is this whole Iran situation. So Trump mentioned this a couple of days ago, that we're going to create like these economic pressures. I didn't know they were going in such a explicit way of basically telling Google, losing 340, that if you are an ally of us and you continue to work with Iran, you are not going to be an ally with the United States anymore. which is kind of what Besant said, right? His argument is we are not going to attack Iran. The idea of a kinetic warfare, he said, is low for that to reflare up. So economic sanctions are going to be the only issue. My couple concerns there are, first of all, economic sanctions haven't worked on Iran over the past 15 years. Like we already don't do business with them, right? So it's like, I don't know if you're going to convince a bunch of these countries. I mean, we tried to convince India to not buy oil from Russia because of the whole Russia-Ukraine thing. Guess what? India has 1.4 billion people. They need cheap oil. They're still buying oil from Russia. So I don't know how many companies or countries that Besant thinks are friendly with the United States will capitulate and completely shut off Iran from doing business. Which I mean, hopefully some of them do, but if they don't, like, how effective is this? Number two, I think the U.S. is admitting that military action is not working. I mean, if military action was working, we would be striking them. Remember 2 weeks ago, we were supposed to have the largest strike since World War II, in the words of Trump, the 10-year right back to 4.7. And we didn't do that, probably because I think the people at the Department of Defense probably looked at the previous military actions and were like, look, this is only emboldening them. This is giving them more agency to fight back. This is empowering them to feel a sense of aggression. This is letting Iran justify to their people why they're hurting Iraq and Saudi Arabia and Kuwait and Bahrain because the U.S. keeps attacking us. And when there's videos of bombs being exploded in Tehran, like, obviously citizens might start feeling that the U.S. is the bad guy. So I feel like they're basically admitting the military stuff didn't work. Spent $37 billion. What did we get out of that? Like, the strait is still effectively closed. And so now this new economic agenda they have, I just have a simple question. Is that really going to work? Because the Iranians already don't care about their economy, or at least the Iranian regime, I should say. I mean, their hyperinflation is like 1,000,000%. Now, Bitcoin is up right now because Bitcoin is realizing how much the spending is going to continue. And the reason Bitcoin's up right now also is because Besant said he would go from 4 billion to higher if needed, which, again, it's not quantitative easing, but it's effectively a backstop from the Treasury to make sure that more liquidity is in the system, even if it's not new liquidity, because maybe that liquidity is just replacing the liquidity that's not there because people are on vacation in August, as Besant said. But the point is, it is a backstop guaranteed from the Treasury, which Bitcoin loves. We saw what happened in 2020 when we turned on the money printer. This is not exactly turning on the money printer, but still, that's why Bitcoin's getting some momentum. But the reason stocks are down is because I think the market's adjusting to this new reality of oil's still up 2.4%. Oil's not meaningfully going to come down if this economic sanction approach that Besant is talking about is actually going to work, which we don't know if it's going to work. And then B, Besant is acknowledging that, like, we don't have a solution to deal with this debt outside of growth. And the market's known this for a while, which is why the earnings growth, I mean, imagine if we didn't have this type of earnings growth and the entire economy was contingent, or I should say our debt burden was contingent on, like, growth. Like, we have to have this growth. You either believe that or you don't. If you believe that, you have to be bullish. And there's probably going to be a lot of opportunity to make money because that growth has to be enabled and the entire country has to come together to make sure that growth happens. If not, then things can get ugly. And I would imagine that, given the earnings growth we're seeing and the administration's focus on growth, we're going to get that. But that's the solution. And I think Besant just kind of made that even more obvious right now, which is why we're seeing stocks take a little bit of a beating and Bitcoin go a bit higher. Gold should probably be up right now, right? I did not look at gold during that gold. Yeah, gold up a full 1%. Silver up a full 5%. Look at that. This was literally during the spike up during the interview. I mean, commodities, like the Besant saying, the Treasury is going to step in. And then this 10-year, unfortunately, did not go down while Besant was talking. Yeah, Elon tried to fix this and it didn't work. I mean, that is part of the reason I was such a big proponent of Doge. A lot of people didn't like that I was, supporting Doge so much, but it really had nothing to do with Elon. It just had something to do with someone actually going in and trying to get rid of the bureaucracy that is the US government and, like, really find out what we're spending that we don't need to spend on. Because if it wasn't Elon, who's going to do it? And then Elon realized, wait a second, Trump doesn't care about this. The big, beautiful bill is going to print even more money. And that's what created the rift between them. And then Elon was gone. He was like, and now I think Elon's just like, all right, that's why Elon is so hyperbolic with his statements about, oh, money's not going to matter, this age of abundance. I think he knows it's either that or it's catastrophe. Because it's either we really grow and this AI shit really reduces prices so strategically, which is also what Besant mentioned in terms of deflation, or, you know, the economy is just not going to have a strong level of ability to withstand this over the coming years. And I think that's why this growth thesis matters so much. Now, the other thing to analyze from Besant is this whole idea of the large cap tech companies issuing this debt. Like, it is in Meta's interest to issue a 100-year bond because, you know, they get to guarantee a ton of money and they get to create a lot of liquidity. Same thing for Oracle, which is now, you know, yielding like 8.5%. Same thing for Google. But it does hurt and create more leverage in the credit markets, because if I can get 8% from Oracle, and I don't think Oracle is going to go bankrupt, why the hell would I, you know, get 4.5% from the U.S. Treasury, or buying by buying a 10-year Treasury, when I'm getting double that in Oracle? Now, the risk is Oracle goes bankrupt, but like, if Oracle just doesn't go bankrupt, and by the way, how can Oracle go bankrupt if we need this whole AI revolution to work? Like, because if Oracle goes under, I imagine, you know, things are going to pop. I don't think it would be an Oracle specific thing only and isolated just to Oracle, which means if things are going to pop, like, at that point, you know, this entire economy is probably going to get hit. So like, it makes sense for a lot of credit investors to take a chance on Oracle instead, even if there's more risk. But that's messing with the US 30-year and 10-year, because it's taking demand out of those risk-free bonds and putting it into this effectively risk-free bond for Oracle and Google and Meta, because you don't think they're going to go out of business, even though there is more nominal risk. But it doesn't seem like Besant is happy about that. Now, the irony in all of this is that Besant says that we need growth to get out of our debt. And the companies that are contributing to that growth, aka Meta and Google, have to issue more debt to be able to, guess what, grow. The problem is, as they're issuing more of these 100-year bonds, it's taking money away from the 30-year and 10-year bonds. And if it's taking money away from that, aka they're getting sold off, yields are going higher. And so it's this weird conundrum where it's like Google and Meta kind of have to issue this debt so that they can keep spending on CapEx so that we can grow. But if they're doing that, it's creating a lot of leverage in the system away from the Treasury debt. And so Besant's just like, all right, screw it. Then we're going to buy $4 billion worth of it, which is the announcement he made yesterday. But that is still not getting bond yields to come down. And so I think everything I'm painting right here is not necessarily a bear case or a bull case. It's just trying to outline the dilemma that the United States is in right now with these bond yields that really haven't come down for about a month and a half now. And like, look, we've had 4.7, we've had 4.8, but those last for a couple of weeks and then they calm down. This has been a good month and a half of it just like being elevated. And we're spending even more money on this war, correct? Now, the way to ultimately fix this, pretty obvious, right? We end this freaking war. We stop spending money on the war. We get oil prices to fall like a rock, which will create more confidence in the market around inflation coming down, which will get the credit investors to easily buy 10-year bonds because they will try to lock in 4.6 or 4.7 before they go down even further. And that would create a lot of less leverage and stress in the system. But then it goes back to this whole new economic form of policy that we're enabling or we're enacting on Iran and we're imposing on our greatest partners. And it's like, do we even know that all the people that, you know, love the United States are going to want to work with us explicitly on this deal? And even if they do, is it really like if they get China to stop buying Iranian oil, yeah, that could create some problems for Iran. I don't know if Xi Jinping is going to pick up the phone and be like, yeah, sure, we're going to stop. We're going to join you in your pursuit to crush Iran by not buying their oil. And so once again, it creates more uncertainty, creates more questions. At the same time, S&P is trading at all-time highs. Why? Because the earnings growth is amazing, which once again goes back to the bull case. We have to grow. That's the only way we get out of it. In order to grow, we need earnings. It means we also need more debt in the system. But that is the reason to be long and bullish equities. However, it complicates things when you have these yields that are not calming down. And with Besant, basically what I got from Besant is saying, we don't have a plan. Our plan is we hope Iran comes to the table and we're going to backstop buying treasuries. But outside of that, it's up to the market to figure out if this is effective. And he even went as far as to say oil shouldn't be reacting to what we did yesterday. It's like, really? Oil shouldn't be reacting? When you guys came in trying to artificially get bond yields to go lower, that you think that's not going to make the oil markets think, maybe inflation's not coming down because they can't deal with this Iran situation. Therefore, oil prices aren't coming down. Therefore, this like pseudo quantitative easing attempt makes us a bit more bearish than bullish on the price of oil. Like, I mean, yeah, of course the oil market's reacting to that, right? And so I think that's kind of the story when you put all the pieces of the puzzle together. And this is why we're seeing some of the choppiness in the S&P right now. We need to call Berkshire, dude. We need to call Berkshire and have them put $400 billion into these treasuries and buy up some of these yields. We need to cut a deal with Buffett and be like, dude, we'll give you 5%. 5% for as long as you want, bro. You want it for the next 1,000 years, we'll give you 5%. Like, as long as just buy up these treasuries as Bloom goes below 200 and get these yields to come down. But even Berkshire is buying Google. They're taking $10 billion and putting it into freaking Google. And Google is issuing more debt. Like, it's all going in different and opposite directions from where it needs to go. And Google has to issue that debt because they have to freaking spend money on the CapEx. So it's kind of crazy when you kind of really, this is why I went on that rant a couple of days ago and said, you know, the debt is such a abstract problem because when you really think of it, it can never meaningfully be solved. It's just the perception of it has to feel like it can eventually be solved. Growth will help that. Ending this Iran war will really help that because oil prices will come down. And there'll be some more confidence in the system. But as of right now, it's not fully there. Nebius 212. I think you're going to see stocks continue to show some weakness today. Rocket Lab almost losing 72 as this 10-year is not liking it. 4.706 now on the 10-year. So that is what I got from Basent. Again, having said that, it sounds like there's a lot of conflicting variables going back and forth, but the inevitable conclusion of all of that is that we need to grow, which means the markets need to go higher and the administration is incentivized to make the markets go higher. That's the reason to be bullish. The short-term problem is the market's already at an all-time high. And so, you know, for people asking in the morning, like, could we get a July-like crash again? I don't know, but what would cause it, if I had to guess, if we get like a 5-10% drawdown, is this yield crisis not calming down. That is not a reason to go long-term bearish, but that because the earnings growth is so amazing, but that is a reason to be like, okay, maybe some of these prices I can get better prices on after we get that discount, if we get that discount. And I think it's fully contingent on the 10-year and the 30-year staying at these levels. If they come down a couple hundred basis points because the war ends tomorrow and Trump announces a peace deal, we're back in action. Because even though we haven't solved the $40 trillion debt problem, we've at least solved these perceptual problems around oil inflation. We'll get more money into the credit markets. Yields will come down. Things will relax. Until that happens, I think we're kind of stuck. And that's what we're going to have to try to figure out over the coming weeks. Yeah, so the three big things from Bassett: buybacks could be bigger than the $4 billion we announced. U.S. yields don't reflect underlying fundamentals, and liquidity is needed in the 30-year. The other thing he said about, you know, U.S. yields not reflecting underlying fundamentals, again, that's just one person's perspective on it, right? Like, if the market thinks the fundamentals actually do require a discounting on these yields, and, you know, oil prices are the easiest proxy to be like, hey, inflation's not coming down, oil's not coming down, so yields should technically go up, then yeah, I think there is an argument where the fundamentals, at least not in the stock market, but in the macro around inflation concerns and yields, is what's being reflected right now. Which is why they're even doing this $4 billion Treasury buyback. It's kind of embarrassing that if it doesn't work, I mean, what happens if this thing shoots up to 4.8? Like, someone's going to have to do something. And we're not there yet, but like, if that were to happen, what, they're going to put $40 billion into buybacks? Like, what is really going to get the market to be confident? And so I think right now the market's just kind of in this like zone of, we have to figure out exactly what's happening and if this stuff is going to be meaningful enough for us to feel confident that rates should come down. Not to mention if we get a rate hike, which I don't think it's going to happen. But in this environment, we can't get a rate cut either. So earnings, that's the story. That's the picture. S&P's at all-time highs, so there's a much more complicated picture because the risk is obviously to the downside. And I think that is what Bassent kind of talked about here around why they're doing these buybacks. All right, that is it for me. I'll be back on the market close. Thank you, everybody, for being here. We don't have any crazy earnings on the market close, so we'll just kind of analyze how this plays out. SpaceX also with those 300 million shares getting unlocked. not really helping. 130.97. Let's see if it loses 130. SoFi is taking a hit because Besant basically just said that we're going to keep pumping money, not literally, but metaphorically, into the bond market, which is pushing yields up. SoFi doesn't like that. Bitcoin does like that. So Bitcoin is why, Bitcoin's one of the only green macro assets today. VG liking that because oil is up. That's up 5%. So your energy names, your crypto derivative names are benefiting. The problem with Robinhood and Coinbase, though, is because they're more high beta than they are crypto proxies. And so that's why those stocks are down about 2% right there. Okay. That is it. That was my take on everything that we got from Mr. Besant. It's been a while since we heard from him, and I guess today was one of the reasons, or yesterday's events in the Treasury buybacks was one of the reasons we finally need to hear from what Besant was trying to say. Word of the day is Scotoma. Scotoma. Yes, we do have Ross earnings after the bell. We'll talk about that. A psychological blind spot, something that is present and observable, but that a person fails to perceive because of their assumptions, biases, or expectations. The market's Scotoma was obvious in hindsight. Investors were so focused on slowing growth that they completely missed the emerging platform opportunity. Okay, I've never heard this word before, but there you go. Scotoma is what we've got. Again, this Besant thing, I think this is going to be analyzed for the coming weeks. This is a bit more complicated than not. I mean, even all the things I just talked about going back and forth, like there's going to be a lot to break this down. The thing that would solve this very quickly is ending the Iran war, but we're not doing that anytime soon. Like like now I'm convinced this is not ending anytime soon. It's just not. If we're going to have to put all this economic pressure on them, it's going to take a while for the Iranians. And I hope I'm wrong. I hope the Iranians have so much economic pressure by next week. They're like, all right, screw it. Let's make a deal. But if it's not, dude, this is going to go for a few months. And if it's going for a few months and oil's not really going to come down anytime soon, again, hopefully it's a few weeks. But if it's not, S&P's at all-time highs. This is where I think the market is expressing a little bit of fear. Could NVIDIA save this? Maybe. But I think everyone already knows NVIDIA's going to have really good earnings. So now, it's like, how good do the earnings have to be to even ignore all of these other macro issues that are stacking on top of each other? And obviously on a day like today, they're not good enough, which is why we're going red. But NVIDIA earnings will be the next catalyst for how this market thinks of it. Yeah, Ukraine war is still going on. I'm like, a lot of these things need to come to an end soon. And hopefully if they do, there'll be a better understanding of this. At the same time, Bitcoin kind of thriving off this, which is why that continues to go green. All right. Thank you, everybody, for being here. I will be back on the close. We'll see what we've got. We'll see if we can get some more analysis around what's going on. We'll see if these yields calm down at all. Oil trying to push 87 right here. And we will keep going from there. Thank you, everybody. Appreciate you all. I'll see you guys on the market close. Bye, everybody. Have a good one.